Hey everyone, Douglas here, and welcome back to the MMT Macro Trader live stream. We're back at it. It's another Wednesday night for the most exciting 2, maybe 3 hours, maybe an hour and a half. We'll see that you will have on the internet this week talking about macro econ, MMT, and just all things
absolutely
fun. Bijou, welcome back.
Yeah. Thank you, man. Thank you.
How are you doing? How are you doing? How are you doing?
Dude.
Okay, you've been on a blackout.
Blackout. So you could tell me anything today, and it'll be new to me.
Okay.
That they had some CPI numbers and other stuff come out.
We did have CPI numbers come out. Some other data came out too. We got some data to look at. Tonight is going to be another kind of data-driven live stream, and yeah. A lot of data coming out.
Sounds good for the geeks. All right.
Yes, the geeks should be happy tonight. I got some early chatters tonight. We have Jeff, man. Welcome. I gotta find some sort of award system for being the first in chat. I don't know what I need to award them. I don't know what I can award them. Maybe I can issue some sort of MMT macro trader currency that will only be used in MMT macro trader world, but
that's right.
Jeff, whatever it is, you got 100 points of it, so congratulations.
Just put in just Jeff only gets to asterisk a chat message with super chat, and then we get to read it out, cuss words and all.
Yeah, I wish.
How about that?
I wish. Okay, Jeff is already... Yeah, I wish I could give away like a super chat for free. Anyway, Jeff gets 100 MMT points for tonight. Thanks for dropping in. We also have... Well, Bijou is here, of course. He's in chat. Ghost on the Half Show. Welcome back, my man. Josh, as always, coming on in. And we've got Jesus as well. Welcome.
Hey, has Ghost got his own podcast or YouTube channel now? Is that what you're talking about there? First upload from Ghost.
Ooh, that'd be neat.
Tell us about it. We'd like to know.
That would be neat. Yeah. You can buy U.S. Treasuries with with my points. Anyway, Bijou, you are right. We did have CPI numbers today. It came in. I think they came in slightly hotter than expected. We can talk. We can talk. Okay, Ghost, I'm reading chat. This is distracting me in a good way. You have 70 videos up now. This is interesting. I'm gonna have to check this out after stream. Yeah. Is it is it just under Ghost on the Half Shell? Is that what I got to look up? I think I might be able to do that. Let's see. CPI data did come out today, slightly hotter than expected. I had called for CPI as measured year over year. That this was last month, so we've now had, since my call, we've now had 2 reportings. I've said that we will get 2 out of the next 3 to beat expectations, but I think we're going to start beating expectations simply because the street doesn't understand how inflation actually works, what's actually causing inflation. And we were finally, my gut instinct told me probably about early midsummer, June-ish, it's summer for my neck of the woods, midwinter for you, that we'd start beating the inflation expectations. But finally we did today. I made a little Twitter post on that. I can go over that Twitter post. But yeah, I mean, inflation is converging on the into the policy rate, exactly as Warren Mosler had kind of stated it would. So we are certainly see that.
Are you telling me the inflation expectations survey was below the policy rate? Is that what you're saying?
Correct. Yeah. So the consensus. I don't know who tabulates the consensus, but the consensus does somehow get tabulated, and whoever tabulates it said that it would be lower than what it ultimately was. And my guess is obviously it's all these different models that are all trying to guess, and usually it's pretty darn close, right? I mean, what's that theory where everyone tries to pick the weight of the cow, and it's like the median weight or whatever is what the cow ends up being.
I don't know the name of the theory, but I know what you mean. That anecdote thing. What is it called?
Something.
The average cow.
Yeah. So anyway,
in math we have the spherical cow, right? So you heard of that one, right?
No, what is it?
There's an old joke about the engineer, the mathematician, and the physicist, and it's like, they all abstract the cow away, and the last one to go is the mathematician. He just says, take a sphere. Although that should be the economist.
Abstracts everything away. Oh,
abstract
man.
The cow into a sphere. Let's begin by taking a sphere.
Speaking of economists.
Yeah, go ahead.
Speaking of economists, Ty Keynes had a absolutely great tweet. I got to pull it up. This is probably my favorite tweet. There's this Austrian economist. We've talked about him here before. Per Bylund is his name.
Per Bylund, yep.
Yeah, and the guy is just a complete asshat. And I've asked him many times.
I'm afraid to spread ideas on Twitter.
That he's an asshat, or that's his line.
Well, I guess it's like all these folks posting to Twitter with their ideology. It's quite amazing. They're just unafraid to do it, or no memory. It's just you got to have no memory of the past and how wrong you've been to be able to manage that feat of non-embarrassment.
That's the thing though, is like he has a live stream and someone paid him like $20 to give his thought on when we were going to finally get a recession. So he had to answer, right? Someone did a super chat, so he's obligated to answer because someone paid him money, right? And he hums and ahs for a minute. Well, it's not exactly what we do, yada 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 yada. And finally he's like, well, sometime between now and the end of the decade we'll have a recession, right? And that was his final answer. I'm like, you've got to be effing kidding me, man. Like that's how good your model is, that sometime in the next 7 years you think we're going to have a recession. Yeah. I don't think your model is actually worth anything. Like, listen, I get it. Like, you're not going to be able to say, hey, January 2024, like that's the recession, right?
Yeah.
But if you can't come up with some sort of way to quantify the probability of something happening, the 7-year itch.
Gotta happen sometime. It's all psychological.
Oh my God! Yeah,
it'll happen.
It was so. Anyway, this is what he posted. This is Ty. Yeah, Ty's going to get some MMT macro trader points. So Per Bylund, if a rock is upsetting the flow of a river, the solution is not to add more rocks to counter the upset or even to replace the rock with a more streamlined one. The solution is just to remove the rock. And the Ty pointing out the fucking irony in this whole situation. Great. So now we have Austrian economics that don't believe in mathematical modeling using hydrodynamics in their examples. What is going on here?
The clap there. Nice.
God. My response here somewhere is, it's really it's the absurdity of it all that they like understand, kind of like a preacher will understand what a good analogy, what a good metaphor will do, right? And that they realize that these analogies and these metaphors that they fit, but they're unwilling to actually take them to their logical conclusion, right? As Ty's pointed out, you can model this stuff, right? It's not going to be perfect, but you can at least start down the process of modeling this stuff.
Well, that's the thing. Yeah, you don't have to model the real economy, but you might gain some idea of what actually goes on if you have a decent enough sort of model of your actual ideas. Put them into practice. Yes. That is it. At least try it out.
Try
it out. Just don't give us poetry like I do.
Everything I did get into a spat. Someone sent me a paper. I read through it. Yeah. Okay. Let me actually. I want to push this last point that I make here, though. To me, what I see is not intellectual laziness on their part, right? It is more just of a really kind of that priest type that says, do as I say, not as I do, right? I mean, it's a slothfulness. It's a physical laziness on their part, because they obviously are willing to do intellectual rigor, right? They're willing to at least think. Granted, the laziness comes in on they just don't actually want to do the damn work of actually trying to figure this stuff out. So I don't know.
Who is this? Yeah, I don't know. I mean, who are you talking about here? Who's they?
The Austrians, like the Per Bylund type, right? I mean, who just want to wax.
They can presumably though they've got little staffers and people, and the neoclassicals certainly can bombard you with mathematics up the wazoo. Like Ghost on the Half Shell mentioned in the chat. He sounds like he's reading John Blatt's book, which is really good. Blatt was a physicist, but he really rips into the econometrics, pointing out how it's all pretty dodgy, dicey stuff, and all the models are crazy because, you know, if there's any equilibrium, it's always unstable and so on and so forth. But in fact, Blatt does just some fairly basic mathematics. He didn't have big computers to work on those back in those days when he was writing his book on dynamical economic systems. I think that's the name of the book.
Yeah.
But you know, ever since, you know, way back, the neoclassicals have had a lot of mathematics they can throw at you. You know, you can read these papers and they're dense with mathematics. But the good ones that do like surveys, they'll admit that, like, really, we don't know which models are great, and we don't. You know, they're just throwing at us math, just abstract stuff, and it's just like, oh, you know, have a think about it. So to your point, in the neoclassical world, when they get really highly trained and get very mathematical, it's not so much laziness to do work. It's laziness about thinking about. It's a meta laziness. It's like laziness about thinking about what work you're doing, whether it's actually any good, any realistic, realistic. And there's a kind of a as we've talked about, I think a lot, but a lot of MMTers, especially Bill Mitchell, talk about it. There's a sort of an inertia or a careerism, I guess, and it's a really damn important thing. It's like you feel it in any academic discipline. You have to kind of follow the mainstream. You know, if you were a physicist a while back, you kind of had to do something like string theory or follow the latest paradigms because that's where the jobs were. Yeah, and so it's this whole institutional thing. This is now speaking. I'm broadening the net from the laziness of the Austrians who maybe don't want to do models because they've just convinced themselves, right, that it's too complex. And in some sense, they were right for
150 years
ago. The tools
ago
that we had to do modeling in the past, in the 1930s or 40s. But nowadays, you can actually take those word models that he's giving us, and you can do what Ty Keynes does and turn it into a little bit of a mathematical simulation, and you don't have to analytically solve things. You can just do a whole bunch of numerics on it, and why not do that and test your ideas out, dudes? As for the neoclassicals, to finish this little story, what do you do with them? They've got all the math. They've got enough mathematics, or so they say, but they just haven't thought about whether.
Yeah, they're missing. They're missing the money picture. I mean, right? I mean,
Or they've got so much mathematics they can just essentially, curve fit. They can just throw a whole lot of parameters in their model. And they're kind of like doing a neural network without it being a neural network in a sense.
Yes.
The Ptolemaic type approach.
Yes.
King was criticizing.
Yep.
Yeah. Anyway, good little
for the Austrians though, right? Who might build from the bottom up, right? From the individual up to the macro, right? That you can't do. Okay. Right. Yep. For them. If that's your cup of tea, I'm going to give you a tool that you can play around with. There's a lot of these tools, but NetLogo is one of them, and it's an agent-based model, right? So you could do agent-based models and build from the bottom up as well. And I think even in our space too, Tim, I'm forgetting his last name.
Oh yeah, I don't remember either.
Anyway, he did some really good stuff on agent-based models and prices and stuff like that. It was pretty compelling. A space I think I'd want to push into the future. But point being is, you can still get these sort of models built if you don't want to just go with a curve-fitting math of the neoclassicals. And you can still get the models built to discover the emergent properties that we're interested in.
To a certain degree, you can. They don't like do what you would call emergence, or what a biologist or sociologist would call emergence, because you only get out what you put in any of those models. But it's like a good tool for testing if you want to do bottom up style whatever it is.
Yeah.
You say they can do pricing models. That would be relative pricing, right? So, yeah.
Well, yeah,
Anyway.
yeah. Like the one Tim Gooding, that was his name. Yeah, he did like a toy trader
Tim
model.
Gooding, yeah.
He did like a toy
Yeah.
trader model to kind of demonstrate. I don't know what he ultimately demonstrated. Let's see. Just for the record, I'm noticing for whatever reason I can't get the chat overlay to work today. So sorry, crew. You already had some good comments, but I can't get them to pop up on stream.
Okay.
Oh well, we'll get it fixed next week. Everything's been breaking. The dashboard broke this week. I don't know what the heck happened. I think I got it back up and running. But anyway, we're starting to get some people rolling in. If you are rolling in, make sure you hit that like button. Once we get
that guy Gooding does claim to do emergent behavior. So
I mean that's his,
yeah.
Yeah, Ghost on the Half Shell. Sometimes I usually I'll like be able to highlight, at the bottom, a little comment or something, and it pops up on stream for whatever reason. I can't get that to pop up, but the chat's still right next to me. If I look this way, it looks like I'm looking at the chat. I don't know. All right.
Cut and paste the PNG of any of the awesome chats.
Awesome chats. Yeah. Just plaster that. God, I hate when stuff like this doesn't work and I realize it midstream because it's like, why the hell isn't it working? And my brain is just like, I kind of want to fix it. I don't know, whatever. I'll let it be.
Yeah. It's going to be a bit itchy, want to scratch. I see. I'm looking at Tim Gooding, one of his papers or books. So they do house prices. So
yeah, it's pretty good.
He has a pricing algorithm, supply and demand dynamics. Hunter-gatherer economies, monetary systems, food surplus and starvation. That's always a favorite for the agent-based people. The resource stuff is quite easy to.
Let's see what
dynamics of children he's got. It's actually quite diverse. I'd have to really look into. It's like for me, what grinds me up about those kind of science projects is they do talk about emergence, but like emergence is to me is something very special. It's a thing that you can't get even in principle from your mathematics. You have to have some sort of top down assumptions and structure, whereas a lot of biologists sort of use a much weaker version of emergence, which is kind of trivial. It's just like, a new novel surprising behavior happens. And you get that from just the nonlinear dynamical system because it's always going to be sort of surprise you when you have a chaotic system.
Okay, I get what you're saying. Yeah. We've talked about in the past Tim Gooding's model before. I actually still have it. I can just bring it up. I don't know. Can I make this bigger? Let's see. I don't know. I might be able to bring it up. It's really fascinating stuff, though. I bought his book to try and understand what he was saying, but maybe we'll bring it up later tonight. I don't know. Bijou, you said you've been a little MIA this week, working on some other things.
Yeah.
Did you? I mean, I see some stuff. I see some stuff on your screen. You got anything that you're tracking this week at all, or no?
In economics, not so much. There was a good follow up though to last week we were talking about student debt, and you were pointing out how fairly small that is compared to other fiscal drains, right?
Yes.
Or other drains on the economy. So macro, student turning back on student debt repayments shouldn't have that big an effect. Except for the people concerned, except for the individual family concerned. It made a massive effect for them, right?
Yeah.
So it's really a bit unfair. Okay, so here's the cool bit that I was listening to. I did allow. I mean, YouTube's a bit of an addiction, right? Stuff pops up and you can't help listening to it. So on a lunch break, I might listen to it. So I caught this episode. I think it was on. I want to say Democracy Now. I can put the link in the chat. You can check it out. Yeah, I think it was Democracy Now, and I've heard this lady speak before, Astra Taylor, and she's really eloquent and really good on the actual topic. I think she runs something called the Debt Collective.
Okay,
it's like like default on your debt because it's the moral thing to do kind of thing. And anyway, so you want to check out that Democracy Now episode to get it in much better framing and words than I can. But it was really interesting because, okay, so she's talking about capitalism, qua Marx, not the type of capitalism that you would talk about, but the exploitative situations, right?
Yeah.
It's an insecurity machine to get workers to be, in debt or just anxious as hell, so they'll take any crummy job working for any exploitative boss. And her thing was really, really good. I'll just point out one highlight for me, because I'm always kind of interested in language, and so the language framing aspects of MMT, really interest me, and I always try to sort of talk about that with people if I can. And the phrase that some people were using was like the old biblical thing where we should forgive them their debts. I think that's a Michael Hudson and Yanis Varoufakis kind of thing.
Jubilee.
Jubilee. Yeah. She was saying, no. Please don't use forgive them their debts. It's like, she says, it's debt cancellation. You just call it debt cancellation is the better phrase, because it's like we're forgiving them for, the crime of learning. They went to university, they worked their ass off to pass these two stupid exams to get some grade points or whatever, in order to hopefully get some sort of certificate that has no guarantee of getting them a job at all, really. I mean, a little bit. But the crime of learning. So we're going to forgive them for that crime by making it a monetary transaction that we could then later decide, okay, maybe we'll forgive you some of that. So I'm definitely mixing up the real and the monetary here, but it kind of makes sense to me, right? So
okay,
so what we should do is, if you're gonna like consider learning to be a bit of a crime, then why don't you forgive the debt, this quote unquote debt now, in real terms? And one really good way to do that would be, and this is my addition to Astra Taylor and the Debt Collective. That would be something that I'd bring up as a discussion point. Why don't you, if you want to do something like that, like punish the students for learning, bond them so that if they go to a public university afterwards, they spend 1 year or maybe 2. I would say 2 or 3 is optional, but at least maybe sort of bond them as a minimum for 1 year to work in a public school. And do it this way. Do it this way.
Yeah.
As a teacher aide, so they can just float into the school any time of the day, kind of they like. They just log their hours like the UMKC Buckaroo system, where the students do some community work to get their economics degree. So it'd be like that, but just for any college degree at a public university. And they just come in and float in and help the teachers, help the kids, just have a ball of a time, right?
Yeah.
Because you're not working for a wage. It's like a job guarantee kind of a thing, but it's a bonding. It's like you're saying, we gave you public education. Okay, maybe we can't actually offer you a job, but instead of having just going straight to unemployment benefit or a job guarantee or all that anxiety of having a job search, why not? If you want to, have your tuition paid and everything like that. At the public university, come and just work at your local public school and kind of do what you like, as long as you're helping out the teachers and the kids. I'd have no problem with it. Something like that. So anyway, that was what I was looking at this week. Also, another thing that you might be able to address. This is
hold on.
topic.
Can I got a few
comments. Yes, definitely.
I got a few comments. My first comment is, if you didn't want to go into debt, you shouldn't have gone into debt. Just kidding. Real quick, Ty, I think I might be able to
add that I'm just kidding to me, right? Otherwise, I'll take you literally.
I might be able to remove the ads out of the gate. Is that a setting on my side that I can turn off? Let me know if I can. I mean, I don't really need the ad revenue. With regards to the debt, student loan debt, with the forgiving thing, I think actually. By the way, Vladimir, welcome. Ty, welcome. I think with the debt thing, one, language of forgiveness. Danger zone. Welcome, man. I think the language of forgiveness meant more what we mean by cancellation. But we Westerners, as we built up, the Christian vocabulary, moved that into more of a moral range than it is a transactional range, right? If I say I'm going to forgive you, it's because you've wronged me in some sense, right? But I think
the ancient one was more like, it's like the king would forgive the debt.
There's like a
bribe. This is kind of like a bribe.
Vassal and what do they call that?
Stop the oligarchs from getting too powerful.
A couple of thoughts too.
That actually applies today, because one of the things they talked about on Democracy Now! On that episode was this insane system that you've got for the student debts. It's like all these people have got their fingers in this pie. It's just Byzantine, and that was also quite surprising. It was quite like, whoa, it's just a scam. It's just a scam. A whole lot of people in the finance sector have got their fingers in the student debt pie, and it's just totally not necessary at all. It doesn't raise revenue for the government, and it's just a bit of a money making aside for a whole lot of these debt collecting agencies, or what do you call them? They're just people who buy the debt off the government, I guess, or off the I don't know how it works, but it's just really, like I said, very archaic and Byzantine. Anyway,
I'm all.
You had another comment on that?
Yeah, I mean, I'm all for figuring out a way to kind of solve the crisis. My other comment though too, when you were talking about this, somehow it was tying in my mind. And one of the things I want to make very clear too is, again, the debt repayment thing is a macro level thing, and in terms of why I don't think there's going to be much of a negative impact long term on it. And maybe there is, right? I mean, maybe there's a tipping point that I don't fully understand the dynamics at play, and maybe some sort of ratio of debt payment, whatever, finally hits. But I don't see it playing out, at least in the way that, I'm able to kind of model the macro economy, especially from kind of a finance standpoint. But one thing that I do want to point out to make amends for, not make amends, but just to really drive home what the real cost of our current policy is, right? So in other words, we are sustaining the economic cycle through higher interest rates, giving additional interest income to the private sector, right? That is how 2022 and now ultimately 2023, that's how we survived 2022 and how ultimately 2023 is forging forward. And I saw this really interesting data come out. And I gotta, this is just me thinking there's probably something here, but apparently the child poverty rate for 2022 more than doubled from the historic low of 2021, right? And I just my gut instinct, and I'm looking it up as we go live here, and it looks like I could be able to download the historical data. But my gut instinct tells me the reason we were able to reach a historic low in 2021 for child poverty level was because we, for the first time in U.S. history, did a massive bottom-up stimulus, right? We had a trickle-up stimulus in 2020 and 2021, and I got to imagine, that took care of, but I mean, that pushed us in the right direction on childhood poverty, and of course, in 2022, we've completely reversed that.
Damn.
Ty, I wish my little highlight comment thing could turn up, right? It was working, so I could highlight your comment. But yeah, hit that like button, baby. Unlike the benefit of doubling child poverty rate, there is a benefit for doubling the like rate. I'll share some good data later when we get there. But Bijou, I'll give you. It makes me wonder. It makes me wonder if I can, if we can somehow show some sort of correlation there of the reality of just poverty. And the second takeaway I'm going to have is, today inflation. I mean, we're continuing to see inflation come down. We'll talk about this in just a minute. We're continuing to see inflation come down, and it's very clear. And I tweeted this out today, or maybe it was, I don't know when the hell I tweeted it out, but it's very clear that fiscal spending is not necessarily wedded to inflation, right? I mean, we've seen massive fiscal stimulus this year, massive fiscal stimulus in 2021, and it was 2022 when we were having the massive fiscal drain that we got the inflation. The kind of the surprise inflation to the upside, right? So I guess what makes sense to me is let's learn some lessons here, right? Let's try and realize, maybe how much of the fiscal spending that we've seen is contributing to inflation, right? And let's make some better policy decisions when it comes down to it, right? I mean, and I guess the way I look at it too is you're not going to get a policy through in the current political environment that's going to damage the financial sector, right? There's just too many people that are too wedded to to asset prices going up forever, right? Yeah. So if there's going to be no political desire from both ends of the aisle, right? I mean, neither end of the aisle wants, except you're on the far left or the far right, wants a financial catastrophe, right? But maybe there might be some momentum to say, yeah, hey, look, we can do this bottom up stimulus, not get inflation, and it can still work, right? And we can continue to make the dent into childhood poverty. So I did want to make the point that it's very, very clear that this trickle down stimulus that we found ourselves in is extremely detrimental to the well-being of society, right? So some of the data I'm already finding, it looks like I can get some data here. So we'll see what we can pull together, poverty rate, and if there's any sort of correlation we can find. I think I can download some of this data. So
okay, sounds good.
But my bigger point is I think we've definitely seen this whole fiscal stimulus game can drive things, and we need to stop doing the bottom up or the top down stuff. All right, Bijou, what's your next point?
I know, just to complement what you just said, imagine if people had listened to the MMTers at the Levy Institute, Randy Ray and Yaver and that crowd, who was saying, we don't need the stimulus to go to everyone. So if the stimulus had been more prolonged and gone only to people who really needed it, child poverty figure would have been even more improved. And it was kind of a blunt side effect of the COVID stimulus, wasn't it? So
the blunt side effect, reducing poverty. Is that what you're saying?
Yeah, reducing child poverty. Oh, oops. Sorry, we accidentally reduced child poverty. What a good side effect. All right, I was able to download the data. Historical poverty rate. God, I don't know what the hell I'm looking at. I don't know what I'm looking at. I've downloaded the data. Man.
What?
You're the man for this live data viewing and capturing.
Okay. So the only thing,
you can't get this anywhere else on the internet, folks.
No. The only other MMTer that's very active on YouTube is like allergic to actually modeling data, so I don't think he knows how to. So you will only find that here. Yeah, I climbed Mount Everest today. He's good.
On the inflation. One thing I was listening to recently was an old webinar with Randy Ray talking about one of his books, and on that he was talking. I think he got a question from the audience in the Q&A, and they were asking about inflation, and I forget exactly what the point of the question was and what the response was, but in the response he points out how the inflation that we're looking backwards at is the PCI, CPI and PCE and that, and it includes these crazy measures like imputed rent. So that gives me this new MMT word. It's called joyflation. Joyflation. It's inflating the CPI numbers. Yeah, joyflation because it's just something that Randy said. It was quite funny, although he's very serious. But to me, it was kind of funny. He says, you're actually imputing some economic activity for imputing for the rent that you would pay as a homeowner if you were renting your house and enjoying all the benefits of renting your own house back to yourself. So there's some joyflation.
Joyflation. I like it. I'm working on this Excel sheet, so I got about half of that.
Yeah.
Okay. Oh, this is so good. Okay, this is really cool. Give me a second. I gotta crop this out. You can have a second. I don't think my name is showing up anywhere on this screen. I gotta make sure that I don't dox myself here.
Yeah.
I think it's covered.
Okay.
Let's see. Is my name showing up anywhere else? I wish Microsoft products didn't put your name in the top right corner of everything. All right, let's do this. We're gonna. I mean, at the end of the day, if I dox myself, oh well. I transitioned and I got the sheet up here. So help me out. Help me figure out what we're doing here. Chat. I got this off of the historical SPM data from the Columbia Poverty Center. Let's see if it'll let me put this in chat. All right. If you want to follow along, you guys can help me figure out what the hell it is that I'm looking at on this data. There's the it's not purple. Hey man, Ghost on the Half Shelf. That was Bijou, man. That wasn't me. I don't. That was. It was his choice. All right. If you guys can help me figure out what is the difference, I think my question is, what is the difference between historical SPM poverty rate and OPM poverty rate? If you could let me know the difference, I think maybe what I could do is very quickly, for the total population, maybe pull, what would we want to pull? What would we want to pull here? Maybe interest rates, maybe we would want to pull fiscal spending. I don't know. Maybe we could pull a couple things here, overlay that with the historical SPM poverty rate, and then go from there. What do you guys think about that? I think that's a good idea. If someone could tell me the difference between OPM, they're probably the same damn thing. I can't do that to merge cells. That's really dumb. Anyway, Bijou, keep talking. No one's going to want to pay attention.
Not sure, man. All I can think of is PM is poverty margin, and
no one's going to want to.
Not sure.
Okay. All right. I don't know. Let me know.
How far are you going to go with this tonight? You can save it for next week.
Maybe the whole way. It's just. Yeah, this is. I'll pull it off screen and Bijou can talk. I don't know if you guys are interested in watching. I don't know, man.
One other little thing I came across.
Yeah.
Is anyone here who's following Douglas on his tales of the S&P 500? Is anyone here looked at the World Index? You can invest in sort of World Index. Yeah, it just sort of popped into my mind because I saw two chats about this, or two podcasts about it, and they were both the opposite. Like, one is like, oh, you got to invest in the world.
Ooh, yeah,
index
good question. Bijou, you're getting in the good stuff. Yeah.
And the other was, no, don't drop the world index. You should be into just. You can enlighten me on this. Oh, push the pleasure button.
Oh, you did. Sorry. You did. So historically,
tell me about it.
Historically, you've wanted into world markets, right? You've wanted to invest in emerging markets. You've wanted, like emerging markets during the 2000s outpaced the U.S., right? And so people who were willing to invest in emerging markets and stuff, whatever, go back to whatever year you pick. There's a big benefit to doing that in terms of returns. And maybe as Vladimir, I thought Vladimir's point out maybe there's some tax. I don't know the tax implication. Either way.
So it's still a bunch of stocks or equities, right? But across the world.
Correct. Yeah. But then all of a sudden, after the great financial crisis, this just hasn't been the case. I mean, the U.S. has just been crushing it. In fact, I got a tweet on this that I got to finally tweet out here, because if you just overlay, and that's a good question too, relative to what currency. If it's all dollar adjusted, if the dollar's been stronger relative to the rest, it'll make the S&P look better. But when it's normalized for the same currency, the U.S. continues to just, at least for Europe. I mean, at least from what I can tell for Europe. the U.S. continues to outpace Europe. And I have a couple theories on this. Number one, for quite a while, the rest of the world outpaced the U.S. I mean, from the 60s on forward, with a few exceptions, the rest of the world, at least from what I can tell, outpaced the U.S. on the fiscal side, right? I mean, their deficit spending was a lot greater. And then the other thing, too, is just the massive private debt boom that we had leading up to the dot-com bubble and the great financial crisis. But I don't say primarily came from, but definitely the acceleration of it happened through the Eurodollar markets. You had this massive Eurodollar expansion. And you got the massive credit boom, and a lot of that was the beneficiary of that was the rest of the world. So relative to the S&P or the Dow Jones or whatever, the rest of the world ends up outpacing the U.S. Post Great Financial Crisis, though, that's all changed. Austerity, especially the 10 years after the Great Financial Crisis, austerity was all the rage in most of the world. The U.S. it wasn't, though. I mean, the U.S. fiscally outpaced the rest of the world by a lot, especially Europe. I mean, in that short amount of time, we almost doubled what Europe did on the fiscal side, right? And and so the U.S. is really outpaced. The other thing too is every time you get a contraction, right? Every time you get a contraction from the private side, the bank. The bank cycle side, the endogenous side, that's the word I'm trying to spit out. Every time you get a contraction from the endogenous side, there's a run to dollars, right? Because you're essentially getting a short squeeze on the dollar, right? When you get a bunch of debt expanding, that's kind of like a synthetic short on the dollar. When that contracts and you get kind of a crisis, there's a run to the dollar, so you see the dollar push up. This is why the low in the dollar happened post Great Financial Crisis. So there's this need for dollars, right? And there's a need to always come up with dollars. And so if you have money to save, you're outside the U.S., if you can save it in dollar denominated assets, there's a little less risk there for you when you're in need to fire sell assets, right? So eventually, you ultimately see even sovereign wealth funds invest in U.S. You even see sovereign wealth funds invest in American equities because of kind of this reason, right? They just start looking so strong. So it really was after the great.
I like that little chuckle.
Yeah, well, I'm hitting all the right spots for Ty. So yeah, I mean that's a lot of it for me. For now, until there's a major structural change, and maybe we're getting that, maybe we're starting to see that in Europe. But for now, I'm going to stay focused on the U.S. side myself. But
right.
If you want to do a broad-based buy and hold strategy that includes global markets, it's not a terrible idea. But I just think the U.S. will likely continue to
So with those global markets, if there's a world index thing, can you buy into that that fund with any currency?
Yeah. I don't know. Ty's a Canadian, so he's got those Canadian dollars. So maybe he can explain this. But do they? Okay, actually, this is a good question because I don't know the answer to this. So the ETFs, I mean, obviously I'm buying ETFs in US dollars, right? So Ty, what, if you wanted to buy the SPY or one of the global ETFs that like, one of the big ETF, iShares or whatever issues, does your brokerage just take care of that on the back? Is that all that it is?
Must be, right?
Yeah, gotta be.
They gotta make it frictionless for the investor.
So yeah, that would be my guess. But yeah. There are ETFs out there. There are a million ETFs. I buy U.S. dollars. Yeah. I buy in U.S. dollars and my brokerage converts it for me. Okay, yeah. So there you go. They are doing it. Yeah, actually, it is. It's not something we're doing tomorrow, guys. So don't get overly excited here. But it is certainly a possibility. You can effectively start up. I mean, you got $200,000 cash and maybe $500,000 to fund the ETF itself. You can get an ETF off the ground. It's something I've thought of. If I can get a very clearly defined rules-based kind of reinforcement model built on top of deep MMT. That might be the way to go for kind of what we're doing. It might be to get more people access to an investment vehicle like that. It would be leveraged, it'd be leveraged to the bleep. But you can create an ETF quite easily.
Really? Yeah.
All right. Well, I'm speaking all this through. I am Dougbot ETF. Oh, that would be so cool to call it DUGB. DUGB. I think you can do 5 letters now, so maybe DUGBT or something like that. Dougbot. Yeah. Ty.
Ghost, did you have anything else you wanted to talk about debt? I was distracting Douglas from his Excel foo there.
I'm still going on it. This is gonna
Are you still going on while he's talking?
I hope Ryan's able to. I hope Ryan's able to jump on, so you and Ryan can talk. Well, I got to scratch this itch, guys. We've got to figure this out.
Well, keep on going.
Okay, so Ghost in the Half Shell, I got what you were saying. Keep on talking about that baby. I thought that's where you went, but all right, what else do we got for today? I promised I'd share some data, so that's what we're gonna do. I'm gonna pause on my project here.
Okay.
Unless you guys are having fun with it. I mean, I could. What do I want to call this project? I want to call this project. What am I even looking at? Poverty.
I can talk about debt for just 1 minute again. I want to give another shout out to Ken PDX, who's sometimes in the chat, usually. The Jacob Feinig article that he boosted a few weeks ago. I was reading it again, and there's another debt that we've talked about there. Like I said, you can have students maybe bonded to work in schools to give back to the community immediately after they get their degree, instead of having to pay the government money it doesn't need. But in most countries in the world, you've got a democracy debt, and some people call it the democracy deficit, and that's something to talk about later on.
Okay.
Well, another day, another week, maybe on a different podcast. I don't know. But the democracy deficit, it's an interesting concept to have floating around there. A debt of democracy.
Okay.
I think we're going to find that in New Zealand and all the elections. You experience that. You got something there?
No, this is really dumb. The data is just not right. There's no way this data is right. I got to figure something out. Like it stops. It stops in 2020, but yet I don't know. Yeah. All right, whatever. We're gonna look at some other data tonight, guys.
Anyway,
we're gonna look at some other data. I'm done being distracted. If Ryan gets on and he can talk, wax eloquently on some other subjects, we'll go there. Mm-hmm. All right, what do I want to look at tonight? We had CPI data come out today, and effectively beat all expectations. We can talk about that real quick. Here are my feelings on CPI and kind of where inflation is going. Like I said, I think inflation continues to get a little bit higher. I think the only way we get out of this, the only way we get out of kind of the situation we're in, which is going to be inflation continuing to kind of surprise to the upside, right? We're only going to see the likelihood of the Fed, wanting to hike interest rates or continue on their path, right? They're going to continue to see, the justification they need to hike rates, right? So how do we get out of this? Way number one is they just realize they're wrong, right? That's one way to get out of this, is that they just realize they're wrong and they just don't see it necessary anymore, right? Or they change the goalpost on their inflation expectation. What else? The other way too is the government shutting down, right? Some sort of black swan event. We have a massive deflationary shock from the outside. Yeah, I realize Ghost in the Half Shell. My thought on the Fed kind of figuring it out, right, is like, well, we've got this growth. I don't even know how they get there. I don't know how they get there. Inflation doesn't really seem to be an issue that we used to think that it was going to be an issue. It's not having that bad of an effect. Let's just stop with the rate hikes. Maybe we might wind it too tight, and they could back their way out of this somehow. The other way would be some black swan event, like the government shutting down, and if we got a sufficiently deflationary hit, particularly from kind of the asset side of things. I know they say they don't look at assets, but if it's enough to kind of reverberate, and they're like, crap, we gotta take precautionary measures or something like that, and they drop interest rates to zero. One, interest rates would obviously go down, but that in and of itself, right, the interest rates going down would be disinflationary, and probably disinflationary enough for that to actually kind of hit the ball rolling on a contraction large enough to actually put us into recession. So I think there's a risk there. There might not be. I mean, actually, one of the things is, we've seen such a deep reset in overall assets on the bank's balance sheets. The banks are in as good of position as they've been in to extend private debt credit to the private sector in quite some time. So I think we could even see kind of a surplus in real terms emerge for a while, 6 months, a year, not as long as we saw in 2000, but maybe something like before the great financial crisis, so something like that. And then the other thing too is just in real terms, eventually the deficit spending begins to give way. We start seeing oil prices shoot higher. So we've gone over this a few times, but I'll reiterate here. That's the path forward. That's kind of the end game going forward.
So how are you thinking that oil prices? You're saying that could impact the price level, but what about in terms of where the economy as overall is going, unemployment and recession risk with the oil price?
Okay.
What's your reading of the effect of that?
So there's a few ways you can measure each new dollar that the government prints, right? Each addition to the deficit, so the private sector surplus that the government prints, in some real term, right? I think the most appropriate way to do it is in what I have pulled up right now, right? In inflation, CPI inflation adjusted, right? It gives you pretty good reading in terms of where the pressure's at, right? But you can also do it in oil terms, right? You divide the deficit or surplus by anything for that matter, right? And so if you're kind of aware of where you're at in the broader cycle, right, you can see what we'll call it what the weight is of the price of oil on each new dollar coming into the economy, because each new dollar, some portion of that is going to go to oil, right? That is the well, yeah, it really is the tax that we pay the sun, almost, right? It is right. It is really the price we pay to do everything that we're going to do here, and so when you start getting into oil deficit spending in oil adjusted terms going negative, right? So you start inching closer to a truly kind of inflationary budget surplus, right? An inflation-adjusted budget surplus. So just again, one way to look at it is once we get below the zero line here on the adjusted, the year-over-year oil surplus or deficit adjusted, we start to get in the danger zone, right? And again, you can see this is a very chaotic data set, right? So it's not the best measure. I really think CPI adjusted, just classic inflation adjusted, surplus or deficit is the best way to go. But knowing that the only risk right now is the price of oil, then what we'd want to be paying attention to is how is oil affecting the overall macroeconomy, and I've said about $200 a barrel is where I think we can hold. This was a couple months ago when I did that equation. We're up close to 90, I think, maybe above 90. I think we'll get a pause here for a brief second as we get a bit of a reset. But ultimately, I think over the next year we push towards that 200 level, and I think at $200 a barrel, it starts to get pretty dicey. You really do start to see a lot of damage at that point. And again, you can look at like the 2000 period, right? During the dot-com bubble, in that instance, we just had such a massive surplus. We didn't have a huge oil spike the way we did in 2008. But you can still have the credit dynamics play out where you can see the economy kind of kick along for a little while, and eventually it rolls over. But that would be one way that we could get recession without some black swan catastrophic event occurring. Just oil just gets high enough, and that gets priced in. Obviously, if oil gets high enough, then CPI itself, as oil translates and reverberates throughout the rest of the economy and the higher price, that'll obviously find its way into CPI as a measurement, and you'll see the inflation adjusted surplus or deficit eventually go into surplus. So that would be a risk. But those are kind of the ways that we would need to see this play out to get there. And again, speaking of data, getting back to the point here, we did get this month's data print. And in terms of kind of the longer term effect here, we continue to see a bit of a decline. We're still far, far, far from the danger zone. Again, we need to get in real terms a surplus. We need to get below the zero line here, right? As long as we're above the zero line, we're okay, right? When we start getting close to the zero line, that's when things start to get tricky. That's when really the growth is fully sustained by the private sector, by the private debt cycle, right? Now,
Right.
We know based on Steve Keen, Ty Keen's work, that you get this level of private debt to GDP, 150, 160, 170, whatever it is, right? Whatever that magic number is, where the dynamics just make it almost impossible to continue to eke out growth, right? You need the massive acceleration upwards to continue to get the growth. Here's the thing: we don't, maybe that level's changed, right? Maybe there are variables that changed, and for the great financial crisis, I think it was about 170 debt to GDP for the U.S., right? Maybe it's 180 now, right? All I know is we're closer to that level now than we were, say, in 1995 relative to 2008, right? So my point is, I don't know if that level shifted higher at all. It probably has. But we're not that far away from it anyway, right? We're maybe 6 months, 9 months, a year out from that level, and if we get to that level, the dynamics play out as kind of the models suggest that they would at that point, then we could really see kind of a recessionary event play out just organically through the processes playing out. So that's kind of where we're at. The data, again, we are seeing a continued contraction here, or a slowdown of the acceleration that we saw after the big pullback in 2022. So we are starting to see a settling. What I think is going to happen is, you get this massive stimulus. We had this kind of massive stimulus, quasi-stimulus, of course, that happened after in 2020 from the additional interest income from the higher rates. And I think just like in post-Great Financial Crisis, we'll get a settling take place. We'll get a settling like we did after the dot-com bubble stimulus. So we'll get this settling that'll play out. And it's at this time that it's the energy to push the macroeconomy forward is going to come from no longer the massive stimulus from no longer the impulse stimulus, we'll call it, but it's going to now come from the private debt cycle, and we're starting to see that too. I mean, if you look up on the Fed, if you look up on the Fed, like commercial loans and that sort of thing, you're starting to see acceleration. Right, you're starting to see the velocity loop slightly higher here. So, some new data this week. It's starting to look like we're changing tracks here onto a new engine that will kind of propel things into what will inevitably be the end of the cycle. Whether that's next year or on, the data will let us know when we get there, and we'll see. But we're certainly switching into a slightly different dynamic.
Yeah. Yeah, I mean, as the government moves more closer to surplus, you're already going to have picking up, because people don't just stop. The economy doesn't just get regulated by the fiscal flows dropping off, because people will just take on more
debt. Exactly.
Credit card debt. Can you pull up the green chart with the oil again and explain that to me?
Yeah.
What a dumb question, because I just at the front end of it there, what it's doing there, and when you say oil goes high on that chart, I was thinking the green line goes up, but then you were confusing green line going down. So
good question. Thank you.
Yeah.
Okay.
Yeah.
So this, okay, here's the core chart, right? This just is the net surplus or deficit year over year, right? Okay. It's just what this is, right? From there, we can take it CPI adjusted. So, right, so now we're just going to divide this by CPI. You get a very similar chart, but you know, speaks slightly more translatable language. I'm then going to take this chart and divide, again, we're back to just the net deficit or surplus year over year, and now I'm going to divide it by oil, by the price of oil. Right? So my point is, we want this to stay positive, right? That means, you know, each new oil-adjusted dollar actually adds to the deficit, right? We'll say, right? Adds to the oil-adjusted deficit. Yeah. Once we get below the zero line, now each new dollar is not offsetting the higher cost of oil.
Got it.
I think
I was getting the numerator and denominator confused.
Yeah.
That clears it up.
That's a good question, man. Again, this stuff all makes sense in my head, but no one's ever asked me to clarify in real terms. So, good question, man. I appreciate that. So there are those dynamics that are playing out right now and kind of where we're at. And I'll post these on Twitter probably tomorrow, so you guys can take a look. What other data came out today? I think the margin data came out as well. So let me see if I can pull that up too. I don't know where it's at. Margin, not to be confused with the butter data.
Here's another data.
Oh, that's margarine.
There's another data project you could look at later on.
Yeah.
I was listening to this guy who was like, "Oh, that's an MMT story," but it's it's almost like an MMT story, and he was actually.
Let me switch to your.
He was actually telling an MMT story. Oh yeah, you could switch over. See, it was interesting because he was talking about. I don't know if I can cite his name. I dropped his name off here. Oh, Vincent Dillard. So he seems to know a bit of MMT, at least partially. And he was going through these causes for the stealth stimulus, is what he was calling it. Which is the cost of living adjustments. Coming in, tax bracket creep, which I thought was an interesting one. Very MMT there, that people go up to a higher tax bracket. Or people drop out of a higher tax bracket to a lower tax bracket, all of a sudden, you know, they're not paying as much tax, I guess. Although I'm not sure which way around he was talking about that, but I think
who's creeping where. Well, usually it means higher incomes mean more taxes.
So usually, if people are lowering their incomes, then they're dropping down to lower tax brackets, and so that could be a kind of a stimulus in a sense. And of course, you had some of the other Biden administration initiatives. Chips and that, and he was talking about the interest income, so he was doing pure Mosler there, which was good. But now, then he had another little topic, I think, which was this inflation cycle, and it was just a bit of a data exploration that he did, nothing really rigorous, and he pulls up this chart, and he says he reckons that there's this cycle in inflation that you can see, prices go up like this. And he indexes from a peak, and he's got these historical cases back in, what is that? 12,000 to 1815. What? That's medieval. What? I don't get that. Anyway, he's got one from 1815.
Each line is the inflation event that occurred, and then there's a cyclical play out. Yeah. I remember the big inflation
back around the 12th century.
Yeah.
But anyway, then he's got a more recent one from the 1850s to 1918, and then since 1918, and he's got these. He reckons these waves, and he was just doing English data, so I don't know. Maybe that's something to look at for US data if you can find it. Lord knows where he got this old data from. It's like what?
Well, so what they do is usually they end up like measuring crap by gold, right? You know, because they've got pretty good historical gold prices. Some of the data that goes back, you know, beyond when we really started collecting data in kind of like known, in like known terminology and quantities and stuff, right? It can be, you know, we can still go back and look at the books and see how they did it. You know, that really started in the 1940s. I mean, obviously you can get data going back, you know, before that, but anything before 1940 to me gets. I mean, look, you can piece it together, you can do what you can, but yeah, I've seen some reliable data going back to the early 1900s, but you get too much before then. I don't know. I'm gonna decrease my my.
I know it sounded real dodgy.
my confidence.
Yeah.
I mean, they didn't even believe in science for the entire period of he has in his red line. So
indeed. So not yeah, take it with a grain of salt. But it looks like what he's claiming there is you get a dip 1.5 to 2 years out, and then 4 years out you get another peak, and there's a bit of a autocorrelation function sort of effect going on there. But anyway, when he does this, I'm highly dubious. I mean, he's talking about 7 and 10 years out, if that's to believe, and you're trying to make these claims that there's this actual inflation cycle. I just couldn't believe it. But anyway, it's one thing to have a look at if you're inclined to see any sort of fluctuation in inflation, some sort of natural fluctuation. He reckons there's a dynamic to it, right?
And they're
going to go up and down in some ways.
Did you just hear that, Bijou? Did you just hear that?
No, did someone ding?
Yeah. All right. Hold on, guys.
Oh, good.
All right, we're gonna get him in here. Bijou, give me 1 second. Yeah, hold on 1 second. I'm gonna need you to. All right, stop sharing your screen for just a second. We're gonna go. To 3 Chrome here. No, we're gonna go to 3 video here, and we're going to bring in
Ryan.
Hey, what's up, guys?
Hey, there he is. What's going on? There we go. Oh, look at that. Now on stream, we're all looking. No, you guys can't see any of this because I didn't transition to the right. Ryan, I'm a bad host.
Not too much is up.
There we go,
here,
Ryan. Now we're live.
Down
now
under. There's a lot that's down. Don't ask me any rugby questions, please.
Oh no, what happened?
Oh, the great All Blacks against the host France. The All Blacks get thumped in the opening match. It was such a big game, and yeah, we're all depressed down here.
Oh no!
It's like, oh no, we're gonna have to wait another 4 years before we win the Rugby World Cup.
Oh my gosh! Oh, that's brutal. I'm sorry to hear that, Bijou.
Yeah. Thanks, man.
Rugby looks like a fun sport, man.
Oh, to play it, it's gut busting. Oh, but yeah, as a school kid, it's just so much fun.
Yeah. I played a little bit at sleepaway camp growing up.
Yeah.
As a kid, learned to play a little bit. Really, really fun.
These days, even Douglas could play it. You can play touch rugby or whatever.
Yeah, Bijou, I don't, and I see this in the chat too. I hate to say it out loud. I mean, I'm almost ashamed of this, but I am about a quarter French, so. I don't know if the English. I don't know if the English have a good French team or have a good rugby team, but that's the other. That's the other. Mainly English and French. So, but I'm glad part of my.
The Scots are pretty good, right?
Not so good. Yeah.
No?
I mean, they're a top echelon team for sure.
Yeah.
But recently, the Fijians beat the English, and and the last World Cup, the Japanese beat the Springboks, the South Africans.
Really?
And so it's really cool because the quality of international rugby is becoming much more even, and it's really good for rugby. It just makes it more exciting if the All Blacks and the Springboks are not just winning everything, with occasionally the Aussies and the English maybe taking one off them. It's just more even, and like the Irish and the French are the favourites going into this.
Okay.
It's just a reality check. It's like none of us were thinking the All Blacks were going to be favourites for this World Cup. None of us were thinking that, but we were all saying it because we're just Kiwis. It's our religion. And so the cold water eventually arrived, and no one was ever saying the All Blacks were going to win this World Cup. So if they do win, it'd be great. But I'm hoping I kind of like the French. They play with a lot of style. So As long as the French win now, I won't be too disappointed. Yeah. Anyway, I was going to say, don't ask me any rugby questions. So now we've had our rugby bit. I've got that off my chest. Okay, I'm admitting I'm not banking on the All Blacks this time. It's just that they play exciting rugby like the French, and it's always good to see the teams that are prepared to throw the ball around and run and play expansive, open, exciting rugby. It's always good to see those teams win.
Yeah, that makes sense.
Yeah.
All right, I've got the standings of the tables up here. We've got Italy, France, Uruguay, New Zealand, and Namibia. So what are we looking at here? The Italians.
It's early days.
The Italians are they any good?
Yeah, they're top
Okay.
echelon
Okay.
nowadays.
Okay.
Argentina, Australia.
Well, I'm talking. I mean, what? Okay, let me ask in each pool here. How many come out? Two? You get two teams that come out.
Yeah, two.
Okay.
So it'll be New Zealand, France. It'll be South Africa, Ireland.
Okay, so hold on. I got more questions before we move forward. Okay, so there's clearly a point system, right? Why?
Like football. Yeah.
No. I'm saying like by the standings, right? I see that Italy, who's 1-0, France is 1-0, but they each have. Italy has 5 points in the standings, but France only has 4, but they've each won 1. What's the...
Yeah, points differential. So if you score tries, you get rewarded for scoring try. A try is 5 points. And so it increases the spread of the points, and the spread of the points, or points differential, I think gives you extra...
points in the in the standings when it's all said and done?
Oh, in the standings?
I'm not talking point differential.
I'm not really sure what that means.
Okay.
I'm sure what standings means.
So,
well, yeah, go ahead. Maybe you've got it.
So, well, I just had a technical question. So to confirm, rugby is make it, take it, right? You score a try and you get the ball back.
Yes, that's right. In the 15-a-side game, but there's another game, the sevens rugby. You score a try, you have to kick off. So it goes to the other guys, which actually works. It works in that game because it's kind of a much more fast-paced game, and you don't want one team dominating. But yeah, in rugby, you score a try, you do get a little bit of a bonus because the ball gets kicked back to you. You don't control the kickoff, but it gets kicked back to you.
Right.
Yeah,
so that's like a much more like capitalist style versus like American football, much more socialist. You score a touchdown, you kick it to the other team.
Yeah. So we do sevens rugby is more the American style.
I like it, Ryan. I like it.
This is more friendly that way.
This is crazy to me though. I didn't realize. I mean, the U.S. doesn't have a team, but we have a state. Georgia has a state team.
What? No, Georgia is a great.
Georgia's a country.
Yeah.
That was a joke. That was.
Oh.
Yes, I realized. The Eagles, man.
All right.
You guys are some of the fastest chaps around, actually. Sometimes.
Go ahead.
Amateur sport over there, right?
Rugby is an amateur sport over here. Yeah.
Kind of, and I mean it's professional, but it's more amateur for you guys.
Yeah.
You still got to go to work and.
Yeah, there's no real. Yeah, it's not like there's no real career path.
Real career, yeah.
Ryan, what's up, man? What's up? What's on your mind?
Dude, I got a lot on my mind. What have you guys covered so far?
Ooh.
I covered CPI. I have some data to show later. We talked a little bit about student debt.
Oil.
Oil kind of pushing higher here. Also talked
Austrian
little poverty. Yeah, talked about how just frustratingly stupid Austrians are.
On that note,
kick them while they're down. Kick them while they're down. Yeah.
No, I mean, so I'm reading this book right now. It's a pretty good one. It's called I'm pulling it up. It's called The Money Revolution, written by a guy. I think I may have mentioned it to you guys. This guy's name's Richard Duncan. It's a very interesting book. He basically tells, he explains like the history of like the U.S. economy through talk about the history of or he analyzed the history of the Fed by looking at the history of its balance sheet, and he comes away with a lot of he's got a lot of great data, and he has a lot of intuitions that are sort of MMT like not even adjacent, but sort of. He doesn't quite get there, but he's sort of getting there, and I don't know. It's just kind of just a lot going on these days. So I'm kind of like mixing a bunch of things together. I think so. I've got that, and he really talks about how revolutionary it was, and how novel it is to be off of the gold standard, and that essentially like the growth in total international credit would have been impossible, and the economic growth that we've experienced would have been impossible had we been on a gold standard. It's just and I think that's something that's very in keeping with MMT. It's just like, yeah, that's operationally true. You had very sort of strict credit controls essentially when you were on a gold standard, and so it's funny to me to consider like the Austrian libertarian kind of mentality of like, oh, you need to be on a gold standard, and that's consistent with like freedom or whatever. And it occurred to me, I was making dinner earlier, I'm just like, that doesn't make any sense. Like, that's just a form of credit controls, because it's essentially the way it used to work, right? Like, so the Fed would hold gold on its balance sheet, so gold is an asset, and it would issue reserves to if the banks had the hold on their balance sheets. And so it's like, and it had to, it was written into law, sort of the level of reserves it could create relative to the amount of gold that it had. And so that actually really does, and also the commercial banks themselves had reserve requirements, right? So, because of that, you really did have, it was a form of credit control. And so there's all these sort of observations of like, oh, the budget deficit used to be, somewhat balanced, and the trade deficit used to be somewhat balanced, and it's because of, the gold standard. And I'm sort of, I've been, thinking about it, and it's like, that was just one form of credit control, right? And so when like Nathan Tankis writes about, the Fed should really get involved in, much more hands-on sort of credit control as a way to, limit inflation and stuff. That is, people will read that and be like, oh my gosh, like, that's central planning. It's communist. It's blah blah blah.
Yeah. Good point.
So good.
But like, how is? But a gold standard isn't like that.
Yeah.
That's even more narrow and controlling,
Yeah.
and form of social control. And I want to also sort of tie this in with I think it was Derek. I don't know if he's on tonight. Had a tweet the other day.
Yeah, he is. He's back.
Yeah. Something, and I'm sorry, I'm going to butcher this. So he said something about like capital markets. They kind of function as a way of governing or disciplining, companies or something like that. It's like a governance structure. I forget exactly what he said. It was much more elegant than what I just said. And that's very, very true, and it was well articulated, and it because it is true that like in the capital markets, they're like, people have this attitude of like having to discipline, oh, this, this guy, is the CEO is paying himself this egregious amount in a salary, or they're cooking the books, they're doing all sorts of accounting shenanigans, they're borrowing too much leverage, and that gets expressed in how like people, they won't buy your stock, or they'll sell it, or you can't raise capital, or what have you. I mean, and what I think, and so like that, there's a lot of that's sort of deteriorated. Like it's really, and I think I've talked about this before, how us sort of dismantling a lot of the institutions that actually add real teeth to like the regulations and stuff, right? Like Sarbanes-Oxley was supposed to, help do away with corporate malfeasance, and it's only gotten worse, right? That Jim Chanos has dubbed this recent period the golden age of fraud, right? And there's just, and the, so part of the problem is this idea that we've really weakened our public policing institutions, the FCC, and others. But part of the problem too is just not recognizing and tying it back to what this guy in this book is pointing out, is that we, like, all this credit that's been created because we went off of the gold standard, a lot of it has essentially flown into and helped pump up financial assets. And I think that and so I'm going to sound like a gold bug crank, boomer crank for a second. It's not that the Fed has to hike rates, right? As we talked about, like that's, when public debt to GDP is just high, all you're doing is just stimulating. But there is something to be said, like, by going off of this gold standard, which is essentially like going off of strict credit controls. Well, now it's a lot easier for, companies to like raise capital and divert resources their way, and then they get political power, and then there's regulatory capture, and they can weaken, the institutions that are supposed to be policing and governing them, right? And then the actual, there are people who are trying to do, because I've talked with people in the investor community who are frustrated. It's like, this company, they're burning cash. It's lever. They pay themselves egregious amounts in stock options and stuff, and yet the stock just keeps going up, and they get run over, trying to short it or whatever, and and they talk about how it's just divorced from the fundamentals and blah blah blah. And I think all this stuff is somewhat related. Just like the political power that has amassed. So it doesn't matter anymore, if your company is profitable or not. You just have to, tell a good enough story that where you can raise capital, and essentially like, the game has changed essentially, and that sort of so-called disciplining function of what capital markets participants are supposed to do, has been substantially weakened. If you're on a strict credit control system like a gold standard, where there's a lot more cautiousness in terms of credit underwriting and stuff, that doesn't really you can actually have more power to be stricter on management teams and stuff to not obfuscate and basically defraud investors and do all this stuff, right? So anyway, I know that was a little bit of a rant, but just gonna throw all that out there, and kind of see your guys' see your guys' thoughts.
Yeah, that's quite a can of worms.
I know. It's a lot.
Tell you what it reminded me of is the other day listening to an interview with Bill Mitchell again, and this may not seem related, but I think it's kind of vaguely related. Talking again about how MMT is just a lens, and you can use it for good or for bad. You can be progressive, and you can grow an economy in real terms, and if you're a government, you've got a monopoly on your currency and your legal system, and you can tame and suppress the private sector or credit markets or parasitic financial activity or whatever's going on that you don't want. You can suppress it in other ways. You don't need to use necessarily just credit controls the way tankers would, or other types of austerity. There's all sorts of ways you can close down businesses. You can do all sorts of things. You can have other regulations. You can have just better regulatory mechanisms, like you said, boost the policing system where it's really needed in the financial sectors, where you need a lot more police. And then he's talking about how but MMT also allows you a lot more policy flexibility to do things if you want to be progressive. So it's about what you want as a society. And then the other thing that came to mind when you were talking there was that the gold standard, it is a way to control credit, but it's still a government choice. So when you say, is it freedom from the government? Well, it's not really. It's just the government imposing, like you say, another way of controlling the amount of credit in the economy, and
right,
putting a bit of discipline on investment. It's very sort of draconian in a sense, and it's like, is that really what you mean by more freedom in it? And what the Austrians, I think, just mean is they just don't want big government, and so they just, to them, they see it as a small government. If the government just does this simple thing of imposing a gold standard, so
right,
it's a bit crazy, but
yeah, that's so overbearing. If you think about it, sure, maybe the government's quote unquote doing less, but that's so overbearing and authoritarian. Oh yeah, no, you just sorry, yep. It's gold, and so
it's gold, and we're going to take it off you because we need it ourselves.
Right, exactly.
We're going to pirate the gold off.
How's that limited
everyone.
Government?
It's like, yeah. Exactly.
I do like that. I do like that line. I mean, that's a great tweet. No. The reason I'm against the gold standard is I'm against the government imposing very strict credit standards. Or yeah. Sure, you can craft it well. Yeah, that's really good, man. I next time I have a chat with Bob Murphy when the economy never goes into recession by the end of Q1, I'm gonna hit him up and say, dude, we gotta have a chat again, so I can, do my victory lap.
Definitely.
Tell you why you got it all wrong. Yeah. If we went to free banking, we would definitely get ourselves a good recession. Yeah, right. That's always been the great irony with the whole gold thing, is when you really understand how the private sector functions in terms of its own money creation. You're just putting the plastic bag over the head, all that sort of stuff.
Right.
Whatever analogy you want, you're putting a lot of drag on the economy.
Yeah, but I also think I think people would say complain about, okay, without a gold standard you get inflation and stuff. There might be something to be said about, when you have much looser credit controls, you get a lot more credit creation, and there's a tendency for that to flow into financial assets, and so you get all sorts of societal problems as a result of that. And I also just think a lot of these so-called rules of thumb that investors and stuff use, based on historical data and whatnot, looking at historical price to earnings multiples on the S&P 500 or something, or market cap to GDP ratios and stuff, And if you if you compare prior periods where there was either an explicit gold standard or people kind of operated like there was, that may not necessarily work going in the future. That may not, as an indicator of something, just because the S&P 500 trades, rich, quote unquote, to its historical earnings multiples, doesn't mean it can't continue going up, because we have this sort of institutional structure of, Mike Green talks about this a lot, how there's basically all these automatic fund flows going into stock, via 401ks, and the buyers are completely price insensitive, right? It's just they're the simplest algorithm of all time. If you give me cash, then I buy. If you take cash out, then I sell, regardless of what the actual price is. So you get this sort of really perverse incentive and institutional structure, and these really weird outcomes, and the historical like back tests and stuff aren't really as relevant as they used to be, because because things aren't the same. And he actually, and I wanted to bring this up too, because I don't know if you guys saw his piece from this past weekend, and he noted that there is a very wide spread right now between the yield on basically like what the price that you can buy, the yield that you can get on the 30-year Treasury TIPS bond versus the the earnings multiple or the earnings yield of the S&P 500, and it's very interesting because it kind of essentially what he's saying is that the 30-year TIPS is cheap, and TIPS is a Treasury inflation protected security, so you're basically buying it at 2% above whatever the inflation, the CPI rate is, for the next 30 years. So that's the yield that you would get. And it's funny because Mosler also tweeted recently that he was like, depending on what tax bracket you're on, you may want to consider buying the TIPS right now, because if the Fed really loses control, the risk is they keep raising and inflation turns higher, and if it, and you become Argentina, in that case, you can protect yourself by buying the TIPS. So it's just, I know this is a macro.
No, I like
trading.
it. Yeah, no, that's helpful. No.
So I just figured out. Well, it's a very interesting idea.
Go ahead, Bijou.
The interesting idea was what exactly, Ryan?
Buying the 30-year TIPS.
Right, yeah.
Which is
I thought you were going to say it's an obvious idea, but yeah, it's an interesting idea too.
TIP would be the ETF for that, correct?
I don't know.
Okay, I think it is. I want to go back to one of the things you had said about, and I wanted to make sure I kind of was tracking this as you were kind of painting the picture. The argument goes that the complaint from the finance sector is really all these kind of zombie companies that they're called, right?
Let's call them speculative companies.
And the finance sector is upset that these things exist.
Yeah, that they exist, that they attract funding. I mean,
yeah.
It's essentially, it's like WeWork, right? Like,
yeah.
Some guy has a lot of money, so he just, by decree, says WeWork is worth $47 billion.
Yep.
And then they try to actually IPO it, and they can't.
Yeah, because there's nothing. Okay, there's nothing there.
Right, and now WeWork trades. It's on the verge of I mean, they released a going concern. They essentially, they're structurally unprofitable. They have to go back and try to restructure all their leases. Otherwise, they're going to have to file. And the stock trades at a $300 million market cap on something that at one point was valued at $47 billion 4 years ago. So that's sort of the poster child of this sort of excess, this speculative excess. And Newman, he walked away with like $1 billion from this thing. So it's really not a stretch to sort of say like, yeah, something is screwed up here. And I saw a tweet from Bob Hockett, who's just like, yeah, something about the financial sector being more parasitic now, that in a floating exchange rate. And I think you get, and I know Mosler has really wants to shrink the financial sector, and I think there's something to be said for how ridiculous things have gotten, and it's reasonable to partially credit that to the fact that we're no longer on a gold standard. We don't have these strict credit controls anymore. But theoretically, that's exactly what all the capitalists, all the free marketeers wanted, right?
Right.
You want like unfettered free market.
Yeah. Okay. So here's my question though. Would you rather have WeWorks, right? I mean, let's just say every year there's 10 WeWorks that pop up from varying degrees, right? Or let's just say whatever these 10 WeWorks are, how many people they employ are just unemployed, right? Like, I mean, let's assume that everything that a company like WeWork or whatever Beyond Meat, right? They're not adding any value to society, right? But yet they still are.
Frame it.
They still are employing people, correct?
Yeah.
Yeah, and so I guess my kind of thought is, if you have a financial sector that is not terribly regulated, right, to not just be wasteful, right, they're still employing people.
Yes.
Yeah. So frame it.
I guess the way I would kind of think about it is not that WeWork or Beyond Meat is what we want, right? But one way or another, the risk is always going to be unemployment, and I'd rather have 25-year-old TikTokers showing their day in the life of a accounts manager at Facebook, doing nothing but getting coffee than than I would them being unemployed, right? Like I mean, even if they are being overpaid by $50,000 a year, right? Because there's you getting coffee isn't really producing that much. It
becomes a very weird sort of local, provincial basic income scheme.
Exactly. That's exactly what I'm saying. It's exactly what I'm saying. It's funded by, really what it's funded by is the fact that, we all, for better or worse, ride the wave that is the private credit expansion. Yeah. And so it's really funded by, future volatility, right?
Yeah.
Because of the way our system works. But I mean, I'm just,
can I reframe that and ask it again?
Yeah.
Because I'll put a more positive spin on it. Like, if WeWorks has a great idea, I want them to get have funding for that. Speak from, it's well, I don't want to call it speculative, but risky. But I want it so that the bank that's issuing the credit to a WeWorks is, or whatever venture capitalist, if you like, whoever it happens to be, are know the risk, and they can't package that debt and sell it. Want them to hold it so that they do bear the risk, and so that they're actually forced. This is the market. This is my question to Ryan. I reckon this is the proper market discipline: is that the bank has to hold the debt, hold the loan, itself, so that they bear all of the risk of issuing that loan, and that will force them. I mean, I guess there could still be some fraud some other ways. You could tell me about that, but that will be more likely, let's say, more likely to force them to do a proper risk analysis of the potential, revenues for this new startup company, and they're going to be looking at it hard. They're going to be putting it under a microscope in that case.
Because 1,000%, 1,000%. And I think there is, and like
so that's
simpler
than a gold standard.
Yeah,
just do that.
Right, that happens. I know. Well, that's like the funny thing about me coming in hot with this whole take is like there's, I'm kind of expressing some sympathy to the gold bugs and the Austrians.
Yeah.
Right. There's something to be said for that sort of strict credit control paradigm. I just think doing it based off of a shiny rock is dumb.
Yes.
Well said.
Yes. That's I think that's the thing though too, is that one of the things that always just kind of pops in my mind, when I think about it, because I see these people who literally spend all day on Twitter, right? I mean, adding absolutely no value, right? I mean, all we do is debate finance shit on Twitter, and like there's no value to anyone there, right?
Right.
In real terms, I mean, in real terms, right? I mean,
Well,
there's value to us, but okay, I realize this, but what I'm saying is that the irony of all these people when they then complain about these companies that end up, not producing anything, right? That they're going to say, oh, look at WeWork. Oh, look at the account manager at Facebook that shows her day on TikTok, and it's it's a glorified day at the spa every single day at work, right? And it kind of ticks me off when I see the people on Twitter who think they're just the smartest people in the world,
right?
They're doing anything more productive than the 25-year-old TikToker showing her day, day in the life thing, right? But my other thought too, whenever there's these discussions, is we didn't know if WeWork was going to be if it was going to work or not, right? You don't know if Beyond Meat is going to work, right? You don't know if Apple in 1997 is going to put out another crap Macintosh, right? Or if they're going to figure it out, right? And
those shared office or shared spaces things, they could have worked if the top top level hadn't been so corrupt.
I mean, who knows? Yeah, right. I mean, maybe it does, or maybe it doesn't. But at some point, you got to let these opportunities have an opportunity, right? I mean, that's there's no perfect system that's going to have some perfect, some perfect.
I agree. Go ahead.
Yeah, I mean, I get no matter what, from like a system standpoint, you want to reduce waste no matter what, right? I mean, if we can always come up with what the private sector wants to create, right? And have no wasteful labor and have no wasteful use of resources. That's the best option. But there's always going to be waste in a system, no matter what, because we just got to figure out what the winners are going to be, and I mean, the system just has to play out.
But a more managed economy, with smart people sort of doing the management, they will still make mistakes, and there will still be waste from that. But it's like it's a slow go approach. If you've got a problem that you really need to solve, like the hole in the ozone layer, or you can imagine what everyone's thinking about now. You want to sit down and plan a solution to it. You don't want to just wait for markets to somehow price things correctly and do it that way, because they have no idea. They don't know how to price the future climate catastrophe or whatever it is, pollution or anything correctly. They just don't know. But I would just say that take note of what Derek said, that you don't want to have a bank credit system to run full employment, because that's just not the way. That's not the purpose of credit. Full employment is the government's responsibility, because they're damn well taxing us to drive demand for their dollar. So they better damn well run a full employment scheme, regardless of what happens in the banking sector. But then I agree with Douglas, because it's not really about full employment in that case. It is a kind of it can function as as a sort of a UBI type scheme, but that's not what you want it to do. It's just what it would do absent a government full employment scheme. So in that case, you really want to focus it on being on high risk sort of ideas that where people are really buttoned down and really have to show the goods. Otherwise, they're going to be out of business and back on the job guarantee.
Where they have skin in the game, where they can't just grift off a bunch of people.
Just grift. Yeah.
I mean, it's like, look at this, like this Vivek guy. He's like a biotech like pump and dump guy. Right? That's how he made all his money. It's like, that's not really that doesn't really serve the public purpose in my mind. But going back to the the full employment scheme, I had another epiphany, which was that what the Argentina program that I think Stephanie wrote about and stuff, was that called the Jefes program?
Jefes, Jefes. Boss of bosses,
Boss, because it's like head of household. Yeah. So I don't know. I had this just this random thought, because there's a lot going on right now. If I'm on the East Coast of the U.S. You drive up or down I-95 at night. I mean, there's a lot of construction going on the highway on 95. They have to close down several lanes. Night work. There was a lot of work done locally. You could see new pipes going in on residential streets, and stuff getting paved and whatnot. So there's a lot of, and it's all a function of the infrastructure bill, which is great. But I just thinking about these nighttime workers and stuff, and it sort of occurred to me like part of, I think, in order to so-called sell the idea of the employer of last resort, the job guarantee, whatever, you really have to sell a vision. And it's it's one thing to say it's transitionary work, so that they can get back on their feet and hopefully make it back to the private sector. That's sort of how it's always been framed to me. I was thinking about it, and let me just add some context too. So my best friend from growing up, he was served in the U.S. military. He was a special forces guy in the Army, and he was a Green Beret. And so I'm just thinking about it. I'm like, what if we had this group of people, right? That are part of this, this full employment scheme, and this isn't some, casual thing. It's no, these are badass dudes that essentially go out in the middle of the night and do missions, and we gotta clean up the, we gotta lay down this new pavement on I-95, and one thing that my special forces buddy used to do, he would be out deployed in another country or something for a few months, comes back, and he would spend a few months taking some specialty course, some specialty rifle shooting course, some skill he wanted to kind of refine or whatever. And it's what if we just had this army of people, maybe we call them jefes, or I don't know, right? And it's just these are just badass handy workers that they could do all sorts of things. What if once a year minimum, you have a free consultation. Someone comes into your house or something, and they'll give you a free consultation on any sort of problems that you might be having, right? Maybe they take a look at your pipes. They're hey, you've got some corrosion going on here. Well, I'm just kind of thinking out loud, riffing a little bit, but wouldn't that be great? I mean, there's always work that you can do, and so what if we just had this this army or buffer, or whatever you want to call it, of men and women that just spend their time. It's not some transitionary thing. It's like, no, like they're constantly doing amazing work and building up skills, and can do so many different things and get called upon to do like really cool projects. Like to me that sounds like a pretty cool kind of vision for that, right? What do you guys think?
Yeah. That would risk pulling in some top talent away from public projects and programs that maybe really need to get done, like restoring wetlands and building out sustainable green energy infrastructure. But up to that use of the particular skills and talents.
But this would all be part of the public, the public job guarantee.
Yes. Oh, okay. I think the way that most MMTers would frame it, that would be just expanding just the public sector employment, because you'd be paying them a skilled wage, not a job guarantee minimum wage.
Got it. Okay.
Yeah. So it's expanding public sector employment in a particular program, high paid, commensurate with their skills, wages, and with that caveat, so it's not the job guarantee program. It's a complementary program for skilled workers. Then you sold me when you said it's cool, because it sounds very cool. but
right, it's more of just like a cultural thing. It's just like like we've got like badass dudes that can do cool stuff.
Let's do these teams of work. Yeah, that sounds awesome.
Right.
But
you're trying to tell me, my wife's listening right now. She's nodding her head about you said a bunch of badass dudes are coming over to the house once a year to see what they can help around with the house. Is that?
Wouldn't that be amazing?
I don't know about this, man.
Come and change your light bulb.
Wife's literally standing right here, and she's like, "Wow, man, this would be great. I finally have a real husband." Okay.
Dude is gender fluid these days, Douglas. It means dudettes as well.
Oh, yeah. Okay, good. Whew. Okay.
No, of course, yeah. No,
good. All right. My
not discriminating there.
My marriage remains secure.
Dudes come in servicing your household.
Yeah.
Okay. No, that's the thing about it, right? You can only do that with a sort of an MMT sort of understanding or MMT aware culture. So before we get there, we have to really work hard on the education to get because otherwise you're just not going to get votes for these programs, and they're not going to get through your House of Representatives or our Parliament over here. But on that gives me another thing that I was thinking of on the education side. I was thinking about this, right, in political economy and MMT education, and why it is so important, and sort of what you have to do to sort of think about it. It's like you can't just write a white paper or a popular best-selling book or anything like that. You can't just do that. And what I was thinking of, why I was thinking of this, is because I've just been getting a bit of a sore voice, actually, recording all these videos for my students, usually mathematics stuff, and I just are repeating the same things that I had to teach in the past. I had to keep repeating myself because I got new students. And so the idea is that this is actually a little bit like how public education and civics education and political economy works. You never can stop. You've got an endless amount of work to do, and what Ryan's saying is that at the end of the day, we really want to transition people into doing work for public good, for work stuff that benefits everyone, benefits all of society, and so we can do that if we have the MMT lens on our thinking. But to get there, to get these programs into parliaments, the education is an interesting thing, because it looks to me like you can't just do a one-off thing like, oh, I've come on MMT Macro Trader. I've told everyone about a job guarantee and how you can have full employment and price stability, and I've told everyone, and then sort of dust your hands off and say, done my bit, my job is done. I'm thinking, no. It's like, why does Mosley keep persisting at it? I mean, he thought that it was only going to be like it would catch on very quickly, but he learned that it's not like taking your spark plugs out and swapping your spark plugs in your Mosler MT9000. It's not an engineering job where you can just go in and fix it right once and for all, or tell your engineers, oh, this is what you do. You buy this part, you put it in here, and then you're good to go. It's not like that with politics. It's like you have to be relentless. And this is, of course, exactly what the neoliberals did. They were relentless. They got into the universities. They got these think tanks. They relentlessly pushed monetarism, and it was just unceasing, relentless. Every single minute, every day, every hour, every year, and that's what you got to do with MMT education, right? You just cannot just wipe your hands off it and walk away and say my job is done. It's everyone else's responsibility now to go back and read my white paper, my beautiful white paper,
right?
And everything on my blog. So it's just, to me, it's like MMT has created just endless work for us, and the job is never going to be done. We just get to keep pushing and pushing and pushing and keep educating.
Right.
So that would be my compliment to what you're saying. That's the only way we're going to get any of this amazing, incredible economy that you have. And again, I want to point out the reason why I keep saying I love America is because I love Americans, and you guys, move anywhere near a little bit in this direction, and it's going to drag along lots of other nations as well. And yeah, but we're not going to get there with just people writing white papers and bestsellers. We got to just keep pushing it endlessly, ceaselessly, and just, for me, it's like it's good. It's like I've got an endless amount of stuff I can do now for the rest of my life, because it's hard to imagine. It's hard to imagine everyone's going to be on board with MMT, but by the time I die, but I mean, hopefully they are.
We got a year or two. We got a year or two, and then before you know it, everyone will be on board. See, what we need is the best applied MMT minds to come together and to start a new project.
Yeah.
Exactly.
Yeah, which might be in the works, guys. It might be in the works.
Right.
Sounds
good.
Oh, you wish, Eugenio. This is more than a wish, man. This is more than a wish. Be patient, but you don't have to be too patient. It's gonna happen. It's gonna happen.
Yeah.
Yeah. No, but I think also, like, well, first of all, it's funny when Bijou, when you were saying that, it reminded me of when I was at the Levy Institute last year for one of Randy Ray's presentations, and he was like, "Yeah, I haven't updated the bullets on the slide since 1997 when we originally put it together." He's like, we changed the coloring and stuff, but the bullets are exactly the same. It's amazing. Like, they've just been hammering this over and over and over again, and it takes, like, when I first started reading this, I was actually kind of pissed. I'm like, what the hell? Like, why wasn't I exposed to this sooner? I had to learn all this other crap before. Right? It's just like where, like, why couldn't I have learned this? I mean, by as the crow flies, like, I live like an hour, 40 minutes away from the Levy Institute at Bar College. I'm just like, it's just so shocking. It's like, oh, they're so close. Right? But it's all good. Better late than never, as they say. But I think the other thing, though, is like,
that's a good story.
is you have to win, and Randy kind of alluded to this in his latest book, is like, you really have to win over hearts and minds and, like, the culture, right? It's not just the operations and the accounting and stuff. It's also like, so again, it's getting back to, yeah, no, we're gonna have badass dudes that can do all sorts of cool stuff, and we're gonna have a sick economy because we're gonna have a job guarantee, and we're not gonna waste all this unused talent and passion and enthusiasm for developing skills and doing great work on stuff, right? And that's the attitude that we have to have with all this stuff. And then the other thing too is, and I think maybe on like our Twitter account or something at times can come across as maybe a little obnoxious, but at the end of the day, there's a little bit of an intention, deliberateness behind that, because it's like, no, everyone's like else is so wrong. Like you have to sort of like put them in their place a little bit.
A little bit, I think. Yeah.
There's a little bit of that.
When Douglas, yeah. Totally.
And I think that rubs people the wrong way sometimes, but
can do.
But there's no other way. No one's going to listen or take you seriously otherwise.
Yeah. Well, that's what a lot of the other MMTs and other spaces are doing as well. They do it in a different way. But it's like it kind of, my hair stood on end when Douglas is suggesting, we got to be really loud and obnoxious. So
I suggested
on the one
that.
hand, yeah, I think so, somewhere on their Discord or whatever. But I'm like, on the one hand, I'm nodding like, yes, we've got to be very loud and obnoxious. But on the other hand, I'm thinking, I've got to get myself another internet persona, and probably a new social security number, and probably a new IRS number.
Right, exactly.
Yeah, man.
It's like, actually, no, in real life, like I'm a complete teddy bear, but
yeah, me too.
But it's just like, but with the online stuff, it's like, dude, what are you talking about? Like, you have no idea what you're talking about. Like, you've never traded a bond in your life. Like,
Oh, that's what I'm thinking.
Not
actually,
Bijou. Sorry.
Whatever. I'm exactly like that, Ryan, and I do that a lot on physics Twitter. Physics YouTube. I just go into the comment section and just like, be very obnoxious. However, in physics, it's actually very polite stuff. You just have to throw a few equations or some maths or some logic together, and it's like it kind of is very tame. But like for a physicist or for a mathematician, what I would say could be very triggering. It could be very like seen as very obnoxious. It's just that in the Twitterati and fintech spaces, it tends to get a little bit more vicious. But yeah, I'm the same. I'm like, people meet me and talk to me in real life, and it's like, oh, you can't be that guy who's like, bombing all these physics channels with all this all these wild ideas like Stephen Wolfram is wrong and everyone. It's fun, and of course I do have a serious intent with it. It's like I do have my physics education at the same time, but it's more for fun, and the macroeconomics is it's just far more deadly serious, right? We're talking about people's lives and the future of humanity. Yeah.
Right, exactly.
Yeah.
The stakes are a little bit higher.
Yeah, slightly higher. It's not about just getting a few billion for the next super collider. Although we could do that too. Just got to lay a bit more concrete and a bit more steel. We could have a super collider, since the money is not the issue. Oh, that reminds me. This morning I had to get up early to go for an airport run, and so I did my it's like almost like once a week. Sometimes it's reduced almost down to once a month. Listen to the public radio here, and totally without fail, it just never fails me. There's always some economics talk, and it's always about trying to find the money, and it's always about, it's like, God damn it! Just like I want to turn it off, but I thought I'd better listen to it because I hadn't had my dose of this garbage for a while, right? But
Right.
these are, respectable people coming on Radio New Zealand and talking about where on earth is the government going to try and find the money. So our Labour Party has gotten themselves very unpopular, and we've really got only two dominant parties who can possibly form a coalition government. The good thing is that they have to form coalition governments these days. But it's a minor bonus, really, because there's still two main neoliberal parties. But the Tories, the National Party, they're proposing this tax on foreign buyers of our land. And so the first thing I'm thinking is, why are we letting foreigners buy our land in the first place? And the second thing is, you need the tax because you want to fill the government coffers. And that's literally the words that they use. It's like filling the government coffers, or
Oh my gosh!
And so they're using it because they are they are to us like your Republicans. They want to cut taxes on New Zealanders. So they're just going to raise tax on the foreign buyers. And this economist comes in and says, "Oh, no, it's not going to work because the tax on the foreigners buying land is just not going to be enough. Not going to be enough to make up for the tax cuts that this party is proposing." So geez, man, this is the level of the discourse. And so, man, it's sad.
Oh,
exactly.
that kind of reminds me, going back to this book that I'm reading. One of the points this guy makes, and there's an element of truth to this, but he basically said how, but he screws some things up. But he talked about all this, by ditching the gold standard, you had all this credit creation, not just in the U.S. but internationally as well. And so all of a sudden, U.S. was buying goods from other countries, and essentially, I mean, his framing is wrong. He was like, they buy goods or they sell goods to the U.S. and they do that by printing their own currency and investing that currency or that credit that they create in U.S. dollars. And I'm like, that is not the right machinations, right? They're not intentionally creating credit to invest it in U.S. dollars. That's not how it works. They have to, like the dollars, the reserves are an account. The Fed credits their account. They have their own, foreign reserves, whatever. So that's an asset. They just have to balance their balance sheet. So they just book an offsetting balance in the on the liability side, right? So yeah, sure, that you could call that they're issuing, their own currency, whatever. But they're not issuing it to buy the dollars. The dollars are there because, they sold us the stuff, and now they have dollars. Now they have a credit balance in their reserve account, so they have to offset that with a debit balance somewhere else, right? But regardless, so he points out, he's just like, that's who's been financing these deficits. And I'm like, they're not financing the deficits by buying the bonds. They, we're just offering them a higher interest savings account for their reserves that they hold, which is a treasury note. So they're just moving it from a checking account to a savings account, essentially. But a lot of times, if countries, have a lot of dollars, and they're like, I don't really want to, we don't need more treasuries, they'll go and they buy U.S. stocks, they buy, U.S. real estate. So those dollars end up getting invested back into and so he does make a good point that, because I think he takes it a little bit to an extreme, saying, this is what caused the NASDAQ bubble in the 90s. I'm like, that's a little bit of a stretch. But he does make a point. Like all this credit that gets created, it does have a tendency to flow back into financial assets, whether that's in the form of stocks or real estate. But that does prop up those capital markets. So that, I think it's important to understand that as a as we think about policy and stuff. It's like, yeah, this is part of the reason that wealth has inequality exists is because that income to purchase the widget that would have gone to the guy in the U.S. is now going to the guy in China, and then the guy in the U.S. loses his job, and and then China comes back and they buy U.S. stocks or U.S. real estate or something, and that helps out. That further sort of helps out with that wealth inequality. So when you have this unhinged sort of no credit control based economy that we have ever since we went off the gold standard, you can get these sort of destabilizing, as I guess Minsky would call it, conditions. And there's obviously been a lot of social strife that's come as a result of that. And so I think it's important to recognize that as we think about sort of solutions and whatnot.
Yeah, totally. Yeah, I mean, in industrialization of the economies, or what some people call capitalism, although I wouldn't, just call it innovative economies, and sort of the classical Douglas idea of capitalism has been, in a way, it's what's the phrase for it? It's not its own downfall. It's like what I mean is it's been successful. It's been too successful in a sense. It's created, the ability of the people mainly in agriculture and construction to it's allowed very few people to do a lot of the work that society really needs as essentials, and so it's freed up so much labor that now we have this situation where for a limited time anyway, 50, 100 years, until we have sort of climate breakdown or soil depletion or whatever it is, whatever crisis happens next. But for a sort of a limited time, we've got the situation where people are just able to do some really crazy things, and we haven't grown up as a whole species. We're sort of in an adolescent phase, I think, is the right kind of metaphor for this. We haven't really learned how to tame and make use of the success of modern industry. It's been too successful in a way, and it's overtaken us in some senses, beyond our sort of moral economy capacity to think about the economy in moral terms, rather than just in monetary terms. So yeah, it's good points you raised. I did have a question based on that, but it's just escaped my mind. Yeah.
I have one other thing I wanted to bring up.
Yeah.
And sort of in keeping with that sort of industrial vision of the economy, and you also mentioned steel before, Bijou. So there's an interesting situation. I want to talk about a stock. Is that okay, Douglas?
Talk about a stock?
Yeah.
Yeah. I am, after all, the MMT macro trader.
Yeah, but you're not a micro trader. You're not allowed to talk about individual stocks.
Yeah, I mean, as long as the stock is SPXL, then yes, talk about. No, I'm kidding. Yeah. Fire away, man. Fire away.
Yeah. By the way, let me caveat this with I have a fairly substantial position in this company. It's a I think most would consider it somewhat risky. It's not investment grade credit. This is not any sort of recommendation. So do your own due diligence, et cetera, so forth. But so this company, if there was ever a company where I'm like I think Bijou, I think I can get Bijou to buy this stock. It's this company. So the name's Cleveland Cliffs. You've probably seen the CEO on CNBC before. So they are a steel company. They're based in Cleveland, but they're predominantly in the Midwest, up in your neck of the woods, Douglas, and they are the largest hot rolled coiled steel producer in the United States. They serve predominantly U.S. auto OEMs, original equipment manufacturers, so like Ford and GM essentially. And what's interesting about this situation, so they have substantially. So quick background for a moment. Back in October 2020, the world was going to hell. This was pre-vaccine. COVID was running rampant still. We were getting a surge, and my boss asked me to take a look at this company, Cleveland Cliffs. They had announced that they were acquiring another, not a direct competitor, but more. They were like an iron ore miner, and they were acquiring a steel company. And I get on this call, and their CEO, this guy Lorenzo Goncalves, and he's basically talking about. He just lays out this vision. He says, we're on the brink of a green industrial revolution, and he goes on and he's explaining their whole vision, and I just became enthralled with this guy. And turns out he's been a very, very savvy guy, very savvy CEO. And so one thing, so they end up buying. They bought ArcelorMittal US and AK Steel, and so captured a lot of market share there. And now, more recently, they have they approached the board of U.S. Steel, and they want to acquire U.S. Steel. And there's this whole thing because they're a very large union employer, and it's kind of an interesting little game theory to this whole thing. But basically, the CEO got the head of, I think it's like the United Steelworkers Union or something, at U.S. Steel to basically like at U.S. Steel, the union has to approve of any sort of merger, any sort of change of control, and the head of the union at U.S. Steel basically transferred agency over to the Cleveland Cliffs CEO to make the decision on whether or not to for the deal to go through. So they offered so Cleveland Cliffs offered to buy the company at $35 a share, half cash, half in Cleveland Cliffs stock. So it's a healthy premium, 40-ish, 45-ish% premium to where U.S. Steel stock was trading at the time, which was a fairly cheap level as it was. And so it's very interesting, and part of their presentation was we acquired these companies, and normally people get laid off, but actually, we've increased our workforce, our unions workers are super happy, and these other union guys, they essentially blessed the deal. They want to become employees of Cleveland Cliffs. And I wanted to share. This is from the latest earnings transcript. So he's basically saying, okay, so where is it now? So they were operating 8 blast furnaces, and as of a couple months ago, or the beginning of this year, they only operate 7. He says if you recall, we idled our Indiana Harbor number 4 blast furnace at 2.1 million tons per year unit in 2022. So with one less blast furnace, we were able to accomplish the same levels of production and shipments. This fact demonstrates the efficiency of our strategic use of HBI as feedstock in our blast furnaces, together with the maximization of scrap usage in our BOS. So essentially, what HBI is copper-ketted iron, and that is, traditionally the steelmaking process uses a lot of coke, like coke from coking coal, and that's very, very carbon intensive. And so HBI, copper-ketted iron, is generated with natural gas, and so they're able, and they have the only kind of HBI plant in the area, so they're able to make the same quality of steel using this HBI as feedstock in the process, which dramatically cuts down the amount of carbon that they use in the process. The other thing that they're doing, and he's talking about hydrogen as a solution. So, so just to reiterate, they were able to idle a plant, so that saves costs while also being substantially less carbon intensive, and they're actually able to they actually are at a surcharge to their to the OEM, saying like $40 a ton or whatever for using the HBI in this process. So it ends up creating this kind of ecosystem of like using up less real resources, less carbon intensity, while maintaining like a profitable business. It's kind of great at minimal cost. But where was it saying? Okay, so he's talking about the next step will be to use the use of hydrogen throughout our footprint. Blah blah blah. He said it's simple chemistry. We've already proven its efficacy, but the main hurdle right now is economics. As of today, the equivalent units of hydrogen gas are about 10 times more expensive than natural gas. That's why we're active player in initiatives to build hydrogen hubs in the Midwest, specifically near their Burns Harbor, Indiana facility. As hydrogen becomes more and more economical, we'll be able to implement it into our entire footprint. So anyway, so they have multiple, and they're not another thing they're doing. They've got plans together for a carbon capture facility where, because the government has created incentives, pay them like $85 per ton of carbon captured, and they've got plans for one that can capture almost 3 million tons of carbon per year. So anyway, a lot of really, really cool stuff, like real science and technology taking place here. And this, this guy is he's a visionary, but also a great operator, and they've got, this great union jobs, and clearly have won favor with the unions in the U.S. And so it's just something. It's just there's a lot to like about this, and I also happen to. I think the stock's very cheap on a cash flow basis. My target for it, in a few years is around $45. It's trading around 14 today. That's using fairly reasonable cash flow estimates and stuff. He said on this call too, he's just like, the market's completely like the stock is for sale right now. I'm buying it with my own money. A very long time from now, I plan on living off of dividends I receive from Cleveland stock. So he's a visionary. It's not been a great performer this year to date. The steel market's been a little bit weak, and I also happen to think that anyone who's been, a money manager for the last 40 years has only seen steel companies go zero in the U.S. So I think that there's a lot of reluctance amongst the institutional investor community to sort of to give the credit where it's due here. This thing trades at the low single-digit multiple of its annual cash flow. So I like this thing a lot. I own a lot of it. I just while we're talking stocks, I figured I'd
I like it. I like
bring that up.
It looks
Midwest company too.
It looks correlated to oil. Does that make sense?
Yeah, I guess
Okay.
there's like what's interesting is they were just an upstream commodity producer of iron ore years ago, like
Okay.
5 years ago. That's what they were, and then now they're like full like vertical integration, upstream. Where they source the iron ore pellets. Midstream, and then they do the actual steel production. They have their own HPI. They have to source some coke, but so they don't have their own. I don't think their own internal operation that generates coking coal. But so they have to. So they lose some margin on that. But aside from that, full vertical integration, including scrap processing. So essentially, like a lot of the steel that gets produced in the U.S. is just recycled scrap. So it's just like recycling old steel. The problem is there's limitations in how much in the actual like processes where you're using that because there's a lot of impurities. I guess copper in particular, and it's very difficult to extract those impurities, and so the steel has a tendency to deteriorate. So that process is done in what are called electric arc furnaces, EAFs. So they do some of that, but they're really leaning into the blast furnace process, which is basically building it from the raw materials. What's interesting is Cleveland-Cliffs and U.S. Steel are the last fully integrated steel producers in the U.S. Meaning they're the only ones that operate blast furnace mills. Okay, so Cleveland-Cliffs. If this deal closes and they acquire U.S. Steel, and they're going to have to issue some debt and stuff, they're going to slightly leverage their balance sheet, although not by much. It's like 1.5 times EBITDA is what I've got as their pro forma kind of leverage. But they will be, if this deal closes, the only fully integrated steel mill operator in the U.S. So that puts them in a very that only accounts for about a third of total U.S. steel production, but still you're the only one doing this. You're in a pretty strong position. So I like this company a lot. I like the CEO. I like the fact that they're like. The union guys love this guy too. So I mean, I have never seen anything before like that, where the head of the union transfers, his decision making essentially to the potential acquiring CEO. So it's a little bit risky and speculative. I mean, steel is historically a cyclical business, capital intensive, and again, these guys do have some debt on their balance sheet. They had done a good job paying down debt. So I think they're a double B rated credit. So, one away from triple B, which would be investment grade. So, it is a little bit risky and speculative, and it has not been a good performer so far this year. But to me, this is like a great long-term opportunity.
That's what I was gonna say. Long term.
Oh yeah, I got a question. I got a question for you. Just in terms of your own kind of how you I mean, I have a pretty simple strategy how I trade. So you have a stock like this. How do you hedge its downside risk across your entire book? Do you do long short? Do you have a specific hedging strategy, or this is just kind of you just try and pick the best bag of the best stocks possible? And
on this one,
I mean, do you have a hedging strategy, or how many total? Let me ask you this, if you don't mind answering. You don't have to answer. How many total stocks do you have on your book?
15 or 20.
Okay.
Which is, I would like it. I'd like to get it more concentrated, but by industry standards, that's considered fairly concentrated.
Okay.
There's so many interesting opportunities out there right now. But this one, the way I think about it, the company, right now they produce 16 million tons of steel a year. They do 4 million a quarter.
Yeah.
If they acquire U.S. Steel, they're basically going to double that production. I think they can do minimum $200 of EBITDA per ton of steel produced, so that gets you to 64, call it $6.5 billion of EBITDA on average per year. And then after, probably, $1.5 billion of capex on average gets you to like $5 billion minus interest. Let's say that's $750 million-ish, and that'll be going down. That gets you to like 4.25. And then tax. I mean, this thing, I think they could do $2-3 billion of free cash flow. And they've got a market cap right now of about $7 or $8 billion. So to me, that's a pretty good return on capital. So I'm not really thinking about hedging it.
Okay.
One way I actually had considered hedging it was by shorting the bonds.
Interesting. Okay.
Yeah, so they have bonds, and the bonds I thought trade a little rich, and the reason they're trading rich is because the company's been in the market buying back bonds, so they kind of bid up when guys know that. So the bond yields 6 or 7%. They actually issued a new bond earlier this year. So I mean, 6 or 7% yield to maturity. Versus so that you've got to pay out that interest every year.
Yeah.
But
I guess I'm thinking more just strategically. You and I just have never talked about this. I'm just thinking more strategically. Let's say you got a company like this, and all of a sudden, the government decides to cut spending, so we know the macroeconomy is going to slow down. You've got a basket of stocks. What does that? What does that?
One way you could do. One thing you could do too that we do a decent amount is like you could write covered calls.
Yeah.
So,
okay. Yeah. All right.
Okay. Yeah. So you understand, and especially this one. This one I imagine has pretty juicy yields because it tends to be kind of whippy. So there's probably decent volatility.
Yep.
Baked in it. So. Yeah, you could write cover calls against this thing.
Yep. Okay.
This one, like, if this thing got really killed, I mean, I would literally So one of the other things why I think institutions might be a little hesitant is the CFO is actually the CEO's son, which that raised some eyebrows.
Yeah.
This CEO, he's a very interesting. He's very charismatic. Very, very good, but he's like a no BS kind of guy, and he has like ripped in to some Wall Street analysts before, like Like,
Yeah.
really, and it's pretty, like he, like, this one time, this golden analyst asked him these questions, and this guy was like, that is the stupidest thing I've ever heard. Like, you've shamed you brought shame on your parents, like, like really, during an earnings call. So yeah, this guy is like, he's like, he's a total animal.
He's like we all are on Twitter, but he can do it face to face.
Yeah. He's just a good kind of strong leader.
Yeah.
But he delivers too. That's the other thing. It's like, it's one thing if you're kind of like a bully. I get kind of turned off when guys are like kind of bullies. But if you can kind of assert yourself, but you can kind of back it up. It's like, look, I'm here. We did what we said we were going to do. We actually exceeded what we said we were going to do. And some analyst is being a jerk, whatever. Yeah, like you've got to push back a little bit, So you like to see that, I think, because he's got stakeholders that are on, like, people's life savings are invested in his company. People's he's got union workers, who are worried about they're working in a safe environment and doing good work and also collecting pension and stuff. So it's there's a lot of pressure to kind of to perform here, and so you've got a lot on you. But I just love too about this thing is like, and that's why I thought Bijou might be intrigued too, is like the whole chemistry angle and how, right? Like this. I mean, this guy is a visionary. They're like, yeah, we look at what we've cut our we can idle plants and stuff. We can be more efficient. That's like the beauty. That's like capitalism working, right?
Right. What I'd be thinking is, I mean, the key word for me would be long term, and if I had money to throw around, I'd be investing in these companies not to make a monetary return, but just because they're good companies.
Just for the record, I do invest to make monetary returns.
Yeah, you do. Yeah. And I don't have money to throw around, so whatever. Take it. You like.
That's because he drinks too much coffee. I see his coffee fund. It doubles about every single month.
So what I'd be thinking is, like, there's got to be an opportunity at the moment for analysts who know a bit of the science and the engineering to put together like a portfolio based on a bunch of companies that are doing these kind of innovative, sustainable energy projects, because eventually they're going to be what has to be invested in, and I don't see in the USA, I don't see the government being the producer for any of these plants. They're going to be subsidizing these corporations and these companies. And that's when the big things will start flowing. You can imagine, like, Tesla is kind of like a mini stupid version of it. It's like they've probably got, I don't know, billions of subsidies and tax breaks because they're marketed branded as that sort of electric performance vehicle. But they're small fries in terms of green energy. They're not really even a green motor car company really at all. And as Derek, I think, mentioned in the chat earlier, I think he even said they're not even a tech company. So there's got to be other companies around. I was thinking, related to the steel industry, there's also other energy generating companies like the biochar people who just use bio waste and things like that. And I think they're quite scalable. It's like you can't build a huge big plant, but you can build a lot of small plants for that kind of thing.
That's interesting.
And then you start to think about how these people can don't have to be too dependent on oil or other energy prices if they're able to generate quite a substantial amount of energy themselves just from things like bio waste. And that's what I'd be doing, right?
Yeah.
I'd be putting together, drawing up a list of a whole lot of these companies.
Yeah, because it is the future. That's why I think Buffett loves Occidental Petroleum.
Yeah.
Because they're building out this massive carbon capture facilities. It's gonna be a whole game changer for their business. Because they're basically going to be able to capture, like what Cliffs is doing. Like they're going to be able to, I guess, capture the carbon and put it back into the earth, and in doing so, they accumulate credits. This is why Buffett's such a genius. Is he sniffs out these situations where basically like Oxy is going to become an issuer of carbon credits. So they're almost like a monetary currency issuer in that respect, right? And that gives them that when you can do that, like you can issue credits and you get cash, then that like really reduces your working capital needs, because you get all this cash up front, which you can then use and you can generate incremental returns on that and stuff. So there's all sorts of, you're almost I mean, that's why he loves insurance. That's why he loves banks, right? Because they can issue IOUs or credits or whatever, and they get the cash up front that then they don't necessarily have to. There's a time period between when that gets paid back out. So I think that's why he was invested in airlines for a little while, because airline miles businesses are sort of similar, right? You issue these credits essentially. And that really reduces your working capital needs. You actually can get like a negative working capital cycle, because most companies it's like, okay, you have to pay the cash out first, and so as you grow, you got cash going out the door. But if you have negative working capital, you actually get the cash up front. And so as you grow, you get more and more cash on your balance sheet. So it's a much better position to be in. So it's kind of interesting. But yeah, a lot of these green. Again, I was on this call. The world was going to hell 3 years ago, and I told them this. I'm like, I totally drank the Kool-Aid. I'm like, this guy gets on and saying, like, we are on the precipice of a green industrial revolution in the United States. And I was like, God, that is so cool.
We'll find out if it plays out, or it is playing out, I guess.
Yeah. Yeah. Oh, it'll be years before we see the carbon capture and the
listen. I'm not a chemist, but the carbon capture stuff seems to kind of break the rules of physics, chemistry. I don't know. Like it's not.
I'll defer to the physicist on that.
I don't know.
Oh well,
I mean,
it's not breaking any rules in terms of carbon. It's getting carbon out of the atmosphere and trapping it. Okay, so that costs energy. So how are you going to run the carbon capture plant? What energy source are you going to use? And so that's why when Derek said you can't make money out of biochar and things like that, they're not money making if they're part of the industrial process. Go into creating doing gardens out of using biochar or using them as energy generation plants that they've done up in the, what's it called? I forget the name of the guy. He's also a visionary, but it's a much smaller scale system. It sounds to the steel guys there, Clifford. But
Derek,
yeah,
I'm on the same wavelength as Derek here. we had carbon capture. It just it captured it and stuck it all on the ground. Got it out of the atmosphere, and that'll happen again one day.
Yeah, right. So as my bro always is saying about the dairy industry here in New Zealand, that the cows are always it's a cycle. He keeps trying to claim
Yeah.
that it's not actually causing too much greenhouse gas warming, but that's a debate.
Well, no.
But
I'm not trying to go that route. I'm just saying. Yeah. I'm
yeah.
not. Yeah. All right.
No, that just ties back to how are you going to do the carbon capture? What energy are you going to use to actually get
To
that
get it out of
accomplished?
yeah.
So if that's just causing more warming, then
And to me, there's not a better process. You can tell me I'm wrong here. There's not a better process than planting some trees and using the sun to capture the carbon.
Yeah.
Right. I don't know.
Yeah. It's a tricky thing because if you could plant whole pine tree forests, but pine trees don't grab the soil, so they can be blown over in strong gale. And so to get a tree that to get a forest that's really good and sustainable, and it's not easy. It takes a lot longer to grow those things. And so there's all these things need to be worked out. And I think, but it's complementary to Ryan's vision and that guy Cliff's vision. Clifford, complementary to that is just eliminating a whole lot of waste and unnecessary stuff that people do. So we don't need to draw as much energy, and we can easily survive, and everyone in the world can have a pretty good standard of living with our current methods of energy generation. And we're only going to improve our energy efficiency ultimately, unless there's some sort of catastrophic apocalypse, we all go back to the Stone Age. So things are not so doomy when you hear about these people with these visionaries and these people with these ideas. It's all part of a story that eventually is going to allow us to get through the very difficult period of global boiling and unsustainable economies, with complemented by you reducing a whole lot of that totally unnecessary stuff that we don't need to do.
Right.
That's that's the kind of type of conservative I'm really into.
That type of conservation. Yeah. I know. It's so funny. It's like right wing, left wing can basically be defined as one side wants to be conservative with financially, which is basically made up, and the other side wants to be conservative with the real stuff.
Yeah.
Right?
Yeah.
Right.
Yeah.
We're all. It's all about saving the children, the next generation, but one of them is like, how are we going to pay off the debt? And the other's like, how are you going to have an inhabitable planet and ecologically sound, ecosystem or whatever.
Yeah.
It is kind of funny because it's the how are we going to pay off the debt guys that get on Twitter and pick on the how are we going to have a sustainable
world.
Yeah, how are we going to have a sustainable world, right? And it's
totally
like
nuts.
and they're the ones that scream so loud that the climate, the climate people are the ones that believe in make believe, right?
Yeah.
And
Yeah.
and it's
You're never going to find enough profit and money to do all of that.
Yeah.
I forget it.
Yeah, and it's it's the Bob Murphys of the world and the Per Barlins of the world that will deny any sort of damage humans have ever done, ecologically speaking. But the biggest damage we've ever done is run up this national debt that our great grandchildren will get paid down, and they'll just be slaves to this thing because
we have to crank up a whole lot of oil-powered generators to crank out that money, pay off that debt. I tell you, it's a hard work pushing a keyboard. Putting your finger.
Yeah. Jesus.
It takes quite a few grandkids to get my keyboard paying off that debt. Vladimir, I'm not sure about A2 milk, but I know that New Zealand has some pretty good top-notch horticultural scientists, and so we're trying to do things with our dairy industry and that. But I have to talk to my brother about that. I'm not up to speed on New Zealand's agri-tech innovations.
My
All
wife,
I know is that it happened. So yeah.
my wife bought me a couple years ago a sweater made of sheep wool from New Zealand. It's very, very warm, I have to say. Very good for the winter, especially in the northeast of the U.S.
Great stuff. Why the hell are we exporting it to you? I need some down here.
I thought our American dollars kept you guys warm down there, but apparently it's the real resources you were looking for all along.
Yeah, you're not happy with your digits on your bank statement.
Yeah. Make warm fuzzy thoughts in my mind, but my fingers are still freezing.
Thanks for working for me, though. I greatly appreciate it. It was a real benefit to you, I guess. Quite the cost.
Yeah.
Quite the cost to me to get the output of that labor, but
it's so funny too. With the go back to the thing that the shouting on Twitter and stuff. It's like yeah, one side argues that the other side's delusional, and they're the ones who worship invisible hands and shiny rocks. Right.
There is an underlying theme that I think connects many of them about believing unseen forces in the universe that connect everything. So I think it fits very naturally into their economics as opposed to the actual agents here down on Earth.
Right.
There's a little bit of that. Also, a lot of libertarians are totally atheists. Hey guys, I've probably got to go soon.
Yeah. It's
how are you guys
getting that point? I mean, this has been great tonight. I could go on forever, but actually I couldn't. I'm hitting the wall, man. I'm hitting the wall. I was up a little late last night. It was late night.
Yeah.
But that's what four kids.
I haven't had
will
lunch
do to you.
yet. It's getting on to 3:00. So
if Ryan and I hadn't had lunch, that would be not good.
Yeah.
It's usually about the time that we hit end. So unless anyone has anything else, I mean, Ryan, if you had more to talk about, I told Bijou, he might, he's welcome to drop early, but always good having you on, Ryan. You've got the number, so. Yeah, keep tuning back in, everybody. We'll get some good stuff coming in the not too distant future, so you don't want to miss that. But otherwise, Bijou, I'll let you take the outro if you've got one tonight.
Okay, yeah, I could do an outro. Maybe I'll do one of the original lying liars of economics. This is. I'll do two poems. One is sort of a Shakespearean type one, and then I'll try and attempt a rap version. You can tell me which is the best one. Or which goes the best. So this is the tale of Smokey Samuelson. Samuelson was a little lying fibber. He told the governments that they could not deliver. No employment for all and no food plentiful, all because the currency was not thought to be sensible. Mosler came along and said, "Mate, you're wrong," in accents not entirely Australian. But this convinced a few bandits the food could be got, and so they went and packed guns like mammalians. When Samuelson said, "See, I told you it'd be," Mosler grabbed him and turned him on a tee. "Paul," he said, "you lying little fibber, their guns point directly at your wee yellow liver." And here's a slightly more modern rap version. Imagine the beatbox in the background. Samuelson, he lied. A lot of people died. Mosler, he hit back. "Here's a job, Jack." Neo-libs be flustered. Mosler spread the mustard. Too hot for their tongues. They cry home to their mums. Samuelson, he faked. Economy got baked. Now we playing chess. MMT, no less. We got some action. Now we got some action. Inflation got no traction. Wages will be saved. Workers ain't no slaves. We be beeping paid. Rentiers, they faint. Mosler from the paint. Slam dunk on a float. Mosler, he the goat.
That was great. I'm going to go with the second version.
Dude, that was amazing. That was amazing.
Boy,
Yeah, we have to give you a beatbox next time.
Oh my god! His daughter plays piano, man. You got to get your daughter in playing get like a keyboard and some hip hop tunes behind you, man.
That was incredible.
That was great. All right, everyone.
All right.
It's been a
More of
fun.
that.
It's been a
Same
fun.
time.
Yeah. Same time next week. All that good stuff. Yeah.
Same in.
Yeah.
See you guys.
All right. Thanks again, Ryan.
guys.
We'll see you all next time. Bye bye.